Good morning, everybody. How is everybody doing? I see Ashley in the background already. Do you want to join?
Oh, my dog is one side.
That's okay. He can be invited to stream with us as well. Good morning, everybody. How are you guys doing? Yeah, not for everybody. Good morning. I'm seeing here already. So, for example, in Kenya, it's already afternoon. So, in that case,
Oh, Kenya, lovely.
good afternoon to you. Did we ever have somebody from Kenya joining us? I'm not so sure. Never noticed. So, the more welcome to you, Derek Tambo. Good to see you here on our stream. And of course, we have some people always here on with us also from Australia, for example. So, I think it's safe to say we are like covering the whole world, you know?
Yeah,
Like,
definitely.
no matter what time zone you're in, the fivers are with you. How are you doing this morning, Ashley? How
I'm good.
were your holidays?
I'm tired. I'm tired.
Tired.
I'm back in work this week. So it's been a bit busy. And they're already setting off fireworks in the UK already. So my dog isn't sleeping in the night. So that's been fun.
I remember when I used to have a dog also, he always went crazy
Oh,
on
he hates
New
them.
Year's
He
Eve.
hates them.
And it's like, you know, they always say like Germans are so like playing a safe bet always. We are like all about insuring for, you know, every disaster that could happen. But once a year on New Year's Eve, everybody becomes a pyromaniac here. It's really crazy. And I hate it so much. I'm not a big fan of personal fireworks.
No, I'm not either.
All the dirt that's lying around on the roads after this, not to mention the noise. And but yesterday morning, I quite early went to the supermarket to run some errands, and there were people queuing already, like a long line
For
to be the
fireworks.
first ones to get in to buy fireworks.
Oh, no, it's horrible.
Insane.
You don't need them. We don't need them.
Yeah, I agree.
All the
I wish
animals
like
that they
the,
scare.
you know, every town would have like a central firework or something like
Yeah,
that. That would be much, much better, like they do
that
in
would be a lot
Singapore.
better. Whereas all the houses near me all have them in the gardens.
Yeah.
So in the evening, it's just, yeah, it's very loud.
Yeah, it is very loud. We have also somebody from Romania, Luana.
Hello.
Good to see you. And from Uganda. How's that actually
Uganda.
pronounced?
Oh, okay.
Uganda,
Oh,
nice.
we're everywhere.
Good to see you, guys. We are so international this morning. Wow. And of course, also welcome to everybody else out there who I haven't mentioned yet. Before we start, I want to mention and highlight here again that the Fiverr still have the 2.5 high stakes account on sale at the moment for just $12. So you save over 50%. The
That's
deadline for
crazy.
this one for the sale is the 2nd of January, and you can have a maximum of 2 accounts per users. So if you ever wanted to get into prop trading, if you are eyeing on one day becoming a funded trader, but you know, maybe you said, oh, I don't want to put down hundreds of dollars for higher accounts already, this is a totally legit way to start. This is also, of course, something you can scale up later on, and this one is not going to break your bank. So remember, just until January 2nd. So if you ever wanted to get one, why not go there to the hub right now and get one as well? And another one from India here, by the way. The more, the merrier.
I'm going to need to pick people's brains because we want to go traveling next year. So there's a lot of countries that people have mentioned that we want to go to. So I might need people's advice.
I'm very sure people are going to be more than happy to give you advice. Did you do any training this morning?
I have. It's been a good day. Traded yesterday and today. So Naz, do you want me to share my screen?
Sure.
1 second. My dog wants to join as well. Come on then up. There he is.
Scott with us as well again.
He's here. He's here.
How are you doing, Scott? Good to see you again, man.
Oh, from Stoke. Somebody just purely from Stoke. So you're about 40 minutes from me.
Wow.
I'm guessing
the
you can guess where I'm
of
from.
The universe.
It's definitely not. My mum lives in Stoke.
Oh, good.
I go there quite often, to be fair. So yeah, very, very lovely day for me. 1.5 just before 7 and 1.5 just after 9, which was quite nice. Standard, same trades that I do every day. So luckily I have a trade copier, so I just press it on my funded and it copies across them all. I'm testing a bit of EU at the moment. So if I just jump onto my EU So a nice trade this morning. So simple, like we were saying last week, find a pattern and stick to it. So sweep of Asia pattern or a sweep of an order block around Asia time has always been a good one. So I've just done a year of data. So I've done a year of data. It looks good. And now I'm just forward testing. So I've just put a small amount in a personal and I'm just clicking the buttons for the next 3 months and see what happens. Obviously, we know back testing and forward testing are a little bit different. You never know what's going to happen. So that's just me at the moment. So my small EU account did well this morning. And then my funded, Darwin, all them are up today. So no, it's been a lovely day. And I'm done trading. And
That's always so nice. Yeah, it's like whenever I have the pleasure of streaming with you, it's like, yeah, I did this, and I'm done for the day. It's like you make trading sound so simple, and I'm always a bit flabbergasted, honestly speaking. I'm thinking here, I'm sitting here always like, am I overthinking things sometimes a little bit? Do I make things too complicated?
Don't do that. You know your way. You stay in your lane. Everyone needs to stay in their lane. I get that from others when other people come on here and they know a lot more than I know, and I'm very click the button and just it happens. But it's been working for me. My testing works.
But that's the thing about trading. One of the worst traders I have ever met in my life are actually analysts of financial markets, because they tend to overthink stuff, and they cannot translate all the smart things they say for obvious reason, because they are usually very educated people, but it doesn't translate into trading. Trading is a whole different thing. And actually, from my experience, and I don't want to make that sound like I don't mean that in the bad way, the less you really think about trading, the more successful you are going to be. If you're not interested in all this, euro dollar is going up.
I'm not interested about how something.
Not saying, of course, that you don't need to learn your ABCs and need to know like what is a spread, what is a swap, how our price is formed, how our trends form, how do I analyze if my trading strategy is working, and so on and so forth. But probably all the other 70% of overhead, and it's very, very interesting. Some of the most profitable traders I've met in my life were actually ones where I never would have suspected them. Like one used to be a car salesperson, it has nothing to do with trading. It's like heavily into sales, and he's like a super trader. And he always tells me like, I don't know why you overcomplicate things.
I think people can get too bogged down into all the detail.
Maybe.
So I have like a really small group, and one of the girls in the group said she didn't click the button to do the trade this morning. And her reason why was because the market wasn't moving the way she wanted it to. But that's not our strategy. So my strategy is if the 3 or 4 reels line up, you click the button. And 9 times out of 10, the trades that you don't think are going to win do end up winning, the ones that don't look right. So my strategy, there's no bias at all in it. And I like that. I need that. So even if it looks like, it's not going to do great, 9 times out of 10, it does end up doing well.
What do you say, like from your experience, when it comes how many percent, how high is the percentage of your success? How that comes from risk management, from strict risk management? Does that play a crucial role for you?
Oh, crucial. So I never change my stop loss. I have a fixed stop loss. I always have. And that's it. My rules are my rules. So if I hit that stop loss, I'm allowed one more trade. So on EU, it's 2 trades and then I'm done. Same with NAS. So my EU, as it won, there's no more trades. But if it lost, there's a rule for me to get back in. The same with NAS, but it is a 1%. My data's driven just on a 1% stop loss. And I think it's quite easy, especially because you can have your daily loss limits. It's quite easy to hit that once you start playing around with your stop loss. And then your data for the year, it's going to be a bit skewed. It's not going to be correct. So for me, I think you need to have a strict stop loss. You need to have strict rules around that. You can't just be moving it here, there. You're not gambling.
That's a good point you just said, in my opinion, is you said your data is going to be skewed. I think this is something people tend to underestimate, the damage that skewed data can do to your whole analysis. And I'm not even talking, about, when you download data, you pass through it and have a look like, is the data clean or are there numbers in there that cannot be? So from a more data science point of view. But if you like record your trades and when you start fiddling, then basically you can either you take those out of the equation later on when you analyze things, or you can
Exactly.
throw your trading journal away because it's
Yeah.
not going to give you the correct data anymore.
It's the same with losses. Like if you get a
Yeah.
couple of losses, there's a lot of people that I know will then go and change something in their strategy. So you can't catch every win. It doesn't. Losses are going to happen. If you start changing your strategy just because you've had a couple of losses, you might offset the couple of wins that you've already had.
Yeah.
So you need to, similar to what I'm doing now, is just back test it over a time period and then put a small amount in a personal or a very small funded and just forward test it for a while to make sure that it works.
Exactly, and I think that's the beauty. Like this, that's why I like this offer right now for the $2,500
For
account
that.
too much. Because it's perfect for testing. You don't need to risk a lot.
1%,
$12.
$25 you're
Yeah.
risking.
And if you can do it with a small account, you can do it with a big account. That's the beauty. It doesn't matter if it's 2.5 or 100K or 500K or a million. The markets we are trading here, especially NASDAQ, especially euro dollar, of course, they are so liquid. You would need like hundreds of millions to
That's what I mean.
even move the market by pips.
I've spent this year just getting my head in the game of just pressing the button. So when the big numbers have started to arrive, my head doesn't change. It's the rules are the rules, so I can still click the button. So I always have my personal as my main trade copier, so the numbers still look small to me. So therefore, the funded ones are in the background. I don't see them. So my head doesn't change when I see figures that are salary figures on a screen, which can make you change your stop loss, which can make you change your take profit. Whereas if you just have it on your personal, which is obviously a lot smaller, I think it helps with your head. But that's what I've spent the whole of 2025 doing. And now 2026 should be big.
I have a dashboard that connects like all of my accounts and like per API imports the information. And on this dashboard, I don't show any numbers actually. I just have R's. So it will tell me like, oh, this trade made like 3R. Or you lost 1 hour there. So I don't get fiddled into thinking, oh my God, this is a large account. Like winning 3R means like winning 30K, losing 1R means 10K, because I know what it's going to do to my mind. Exactly what you just said. You're starting to think about, my God, on this trade, you lost like more money than other people, earn as a salary in 2 or 3 months.
Yeah.
And this is a dangerous path to go through. And
100%.
it took me some time to get. Of course, we have. Somebody's asking here, I don't know if you want to talk very much into detail about it. Probably not.
Not into detail. The only issue with showing it into detail is because I have quite a few funded accounts.
Yeah.
If you're in and out at the same take profit and stop loss that I'm in and out, I could get banned from a number of my funded accounts. So all I've done though is found a pattern. So mess with a couple of indicators like I have on NAS. And find a pattern that works for you. So I have 3 or 4 rules. I have a set time frame. So I only trade between 5 to 7 and just before 10 a.m. in the morning. If a rule lines up the way it should do, I then get my certain pullback and then I'm in. And then my rules will determine whether or not I go for 1.5 or 2R. But just have a play around, find a pattern. This pattern usually happens most morning. The same with EU. So you have a little sweep of Asia, or you have a sweep of the top or bottom of Asia. It's a very simple strategy. It happens most days. So all you need to do is analyse and go through. Stop trying to jump in every group where you've got to pay thousands for a simple strategy. It's very easy just to make one yourself. And people that the big people who are making money out of the big groups selling the strategies and more making their money on selling you a strategy that might not work. So find your own, find a pattern and just back test it and it will work.
Very wise words. Yeah, absolutely agree with this. Don't buy a strategy out there or join those groups. I'm not saying like all groups are bad, obviously, but you have to know like they are not earning money usually from trading their strategy. They usually will have some kind of strategy that makes you trade a lot, and then they drive you to use their affiliate links, to open broker accounts. So they earn commission every time you trade. Nothing inherently bad with this, but look at it with a grain of salt. It's like people 100%. Are usually not altruistic when it comes to trading.
Like I do have a small group. I'm very choosy with who I have in there because obviously I do share my strategy in there. But I only made that. I think there's 10, 12 people in there. I only made that group just so that I had traders to speak with.
Yeah.
Because I think it's very difficult in this world to find genuine traders or people that are not trying to sell you stuff, etc. And it's quite nice because 50% of that group is female as well. So it's quite nice to be around a lot of female traders because you don't see many in this world. So no, I do have a small group. You can message me on Instagram if you want to, but I don't advertise it. I just wanted it as a small group of people to talk to and run ideas past. But yeah. That's my answer.
It's true, no, it can be quite a lonely profession.
Oh, 100%.
You know? This is actually why I got into streaming and doing a bit of YouTube or something to connect with other people who are doing the same, because otherwise, I mean, I sit in my office. You guys know I spend most of my days nowadays with coding and back testing and automating stuff, but it can get very lonely. And I'm not saying I'm like a super social person. I tend to be a little bit an introvert, believe it or not. But of course, everybody needs a little bit of human connection, or most people at least need. And this is like, for me, how I get this and how I got to know, all the nice traders, including you.
This is quite nice because it's people that you talk to that you wouldn't ever speak with. Like this time last year, I never thought I'd be sat here on this podcast. I'm just a girl from the middle of the UK who clicks a few buttons, so it's quite nice.
Well, that's nice because it makes you so relatable, because I bet most people that are watching us are at the stage right now at the moment too. They have a job they need to attend to, because by the end of the day you need to feed your family. Or
I have a full-time, very stressful job, and I do this roundup.
Yeah. So you have like only maybe the mornings or maybe the evenings, depending on what your job is, where you actually can trade. And you're a good example of how still you can be successful and you can earn money as a trader and become a professional trader if you adapt like the reality to what your reality is.
Yeah, that's what I mean. Like,
especially when you trade from the mobile phone.
I trade walking the dog, so as most as you know. Yeah, so between 7 and 8, I'm walking the dog, and that's where most of my trades happen. So this one, to be fair, I was boiling the kettle as I was getting ready to walk the dog and just jumped in, which was quite nice. It was the same yesterday morning. Where are we?
But are you with us today 2 hours or 1 hour, actually?
Just 1 hour today, my dear.
Because when I will do in the second hour, maybe do something, because it fits very well, because you were talking about backtesting. I want to show you guys out there then a method how you can use a tool like ChatGPT or Claude.
Oh, that'd be good if we can do that.
Backtest trading strategies or backtest indicators. I know a lot of people out there are interested in that, but it's like the method of doing this and how things can go wrong. We could probably talk like 10 hours about it and just scratch on the surface.
I'd appreciate that if we can do that.
Yeah, sure. Yeah, I said to Jonatan already we should do a special about this, because it's it saves me an insane amount of time every week nowadays, but it can be quite tricky to get into it if you don't know where like the traps can be also, because the large language models, sometimes they will tell you things that are not the reality, and it's upon you to notice, when they start lying to you. Nice. I quickly, if you don't mind, switch to my screen again. So we had yesterday, I was introducing a new trading system that I was working on. I don't know if I talked about this last week, Ashley, already. So a trading system that is based on option expiries. Yeah. And this one will go live on the 5th of January.
Oh, exciting. Is that Monday?
This will be connected then to a Fivers account, probably a high stakes account with like 20K on there. And we'll see if the strategy can, in an automated way, get into the funding stage. I added more currency pairs also throughout the week to this one. We actually had our first trade on this one, which yesterday, there was a signal here in dollar yen. Perfect. Which ended up with a nice profit of 21 pips, which is pretty cool. Judging the market is very, very low in volatility at the moment. So as we go by, you can see I added more pairs here now as well. It's a bit a hideous process to add the pairs to that, to be honest. But yeah, well on the way. And if you guys out there are interested in seeing how is this going to progress, I'm going to share that. Probably I'm going to be online, every Monday again. maybe also Wednesday. So it will be a regular thing in the sections where I stream that I share with you. This is what the system has done, because it's going to be very interesting to actually see what you mentioned. Is the real life test in the real life market as good as the results in the back tests?
Yes.
From my experience, no, it's never going to be. But in this case, if it's just half as good, it's still going to be a very good and a very profitable trading system. But yeah, I thought it might be a good idea this time when I start something new like this, to share it openly. And so you guys can also see where is the point where I maybe determine this is not a good system, or where's the point where I say, yeah, this is a good system. I can just let it run, and hopefully enjoy the fruits of labor from it then. And if like everything is successful, I'm planning also on rolling this out for the audience so they can have a look at signals like this as well. In whatever way this is going to be, I don't know yet. But this would be at the very end, of course. First, need to prove that this one can be successful. Yes, other than this, I told you yesterday, I'm actually expecting the markets yesterday and today to be a bit on the higher side. NASDAQ, in my opinion, disappointed a bit. I expected that we have more drive to the upside, to be honest. Maybe that's going to be the case here. But December has already been quite a good month. So maybe all the institutions out there are already well invested and don't need to do that window dressing anymore. So I don't see really. Today, I don't know how long the trading hours actually are tomorrow. It's a regular day in most parts of the world. There would need to be a trade really that jumps into my face. So something like I was talking about gold yesterday, quite a candle to the downside yesterday, guys. And I said, if we really see something like the all-time high touching, which was the case yesterday, I missed that trade, honestly speaking. I said yesterday I would trade a bounce off here. I missed that trade, sadly. Could enter now here, but I think it's a little bit too late. So I would see today if we bounce off what is the resistance from our past all-time high and end up somewhere here around the 8 weeks moving average. That would, for me, be like an indication that I say I want to get into a swing trade there. However, you want to be a little bit careful. We have now public holidays coming up again. So you're going to pay a bit of swaps in a long position there. If you enter that one today, you're probably ending up, if you don't close the trade that is today, again, paying like for 3, 4, 5 days swaps already, which can get quite expensive, as we saw yesterday with Jonatan, who had like 1 month of a gold trade open, and the swaps just ate up a large portion of his profits. So something you want to be on the lookout for sure. It's going to be different once the fivers start futures trading as well, which is coming soon, and I cannot wait for it. Is that something you want to do as well, futures trading?
I think I'm going to stick with what I'm doing. I do futures in regards to on another platform. So I have got another account on a futures platform. But I think for me, just trying to maneuver them all, it's getting quite difficult. So I'm just trying to stick with what I have at the moment. What about yourself?
Yeah, the thing is, for example, I have one strategy on the fivers that is trading the NASDAQ. The problem is it's on a bootcamp account. The leverage is very low.
Yeah.
So the leverage of 2.1. So I would like to have a higher risk actually per trade than I am currently comfortable with this leverage. So usually it's wait, I can actually show you that strategy. So usually it's a strategy where I enter here on the signal. So the last long trade, for example, was here yesterday at 25,600.
Yeah.
Then I have a stop loss, just one box, which is 20 points below that. And I initially wanted to risk something like 0.5% per trade, but I cannot do that because it exceeds already the margin, because my stop is so tight. The position size is quite large, right? And which ends up with me needing to have like on a 100K account, like 200,000 of margin, which is not possible.
You can't do
so
it.
right now I'm trading something like 1 to 5% of a risk.
Okay.
And I don't know the specifics, obviously, about how leverage and margin is going to work on the futures, on the new futures accounts for the fivers in the future. But I can imagine that maybe it's going to be a little bit more different there, allowing me to actually take more risk. I cannot
Oh
believe
yeah,
I say that
definitely.
more. I want to take more risk, something you usually don't hear from me. Then because I know this strategy has still quite a margin, even if I would go as high as 0.5% risk per trade.
Okay.
I would still, according to the back tests at least, still, and to the data I have from live trades, still stay within 4% of max drawdown, which
All
is
right, well, that's fine then.
perfect, you know.
Yeah.
And like this, I'm like with I'm at like 1% drawdown maximum, which is nice, of course, as well. But you know, when you have something that works, you kind of get like impatient. You want to pass
Yeah,
the
very.
evaluation
I'm like
stage.
that.
You want to get funded very quickly.
I'm like
Yeah.
that.
And yeah, so but let's see. You know, it's the most important thing is it's something that works. Whether it's going to be traded then on a futures account or on the good old Forex account with a NASDAQ CFD like I do right now. You know, it's a luxury problem to have actually by the end of the day.
We'll see what it looks like when they bring it out.
Yeah, exactly. Which indicators this and what do you use to make this? This is one of my proprietary indicators, so there's a lot of stuff going on in the background. For me, it just paints like when it comes to the conclusion, this is a good area to buy or good area to sell. Doesn't mean I take every trade. There are like other factors coming in, but it's a little bit limited on trading view what you can do indicator wise, because you cannot have API calls to external data, for example. They don't allow you that. Sorry, I cannot share this indicator, of course, because there are like hundreds of hours of work that go into something like this, and I hope you understand that. But it's nothing you can just find off the shelf on TradingView. That is. We have Louis too. How are you doing, mate? Are you still in your gold short? It must have been very profitable. Louis was in a gold short yesterday. That he
Okay,
shared with
lovely.
us, and I think that it was a great trade. Nice. Yeah. What else? You are trading euro dollar right now.
I'm just having a look at it, so I'm
Okay.
just forward testing it. Just messing around with it now as we speak. But obviously, my bread and butter is NAS. Always will be. But
Is the strategy the same? Like the patterns you're looking
no,
for? It's
no,
different. Yeah.
completely different. Which is what I needed. So obviously, my strategy on the NAS is the 1 minute. My strategy on EU is a 5 minute. It's just so that I know I've got between 5 minute candles on the EU, so I've got a bit of time to be looking at the NAS. Because obviously the NAS happens quite quickly. So I just needed, like you have to do, you just have to find strategies that work around your life. So while I'm walking the dog, it's quite difficult to be looking at the 1 minute. Say I was looking at the 1 minute on two currencies. So it's quite nice to have a 1 minute strategy and a 5 minute strategy.
It's I asked you because, and you just confirmed actually my own experience. You know, when I started developing strategies, like one of the go-to hypothesis I had, because I read about this everywhere, you know, was like, oh, a trading strategy that you find for one asset should work on every other asset as well. Like, should be a universal truth. But in my opinion,
I
this is
don't
not
think it
true.
works.
You know,
No.
it doesn't. It does not work like this.
No.
And it can work very, very well on crypto, and it doesn't work at all, for example, on euro dollar. Always
Exactly.
depends on how effective the market is, in my opinion. I'm seeing this right now, actually, with this option expiry trading strategy right now, that it works. For example, let's go to the history here, backtest history. It works very well on almost any pair, with the exception of pound sterling US dollar. It doesn't work
Okay.
on that at all. There's like no edge. And for some of the pairs, I need to have a so-called volatility regime filter, meaning, for example, on euro dollar, I'm totally skipping low volatility settings. These are usually measured by something like the ATR over a period of time, for example, because there's no edge. The success rate drops below 50% there, and the expectation, the payoff, so the R is below 1, which means you're probably going 50%, and below 1 hour means long term you are very likely to lose money with something like this.
Yes.
And for me, it's fascinating how that changes. There are many trading pairs where the strategy works well within all volatility regimes, but for some of the trading pairs, you need to make sure that you skip low volatility, or for example, on dollar yen, I need to skip medium volatility, which is weird too. It works on low volatility, but not on medium volatility, and then it works on high volatility again. And things like this.
I've tested mine. So like I had a look on EU if my national, and it just doesn't. Like I have a very tight stop loss on that, so it doesn't work on EU. We all know how volatile EU can be.
Do you think so?
Yeah, I do. I think well, I'm not comparing it to gold, but compared to NAS.
Gold is like, when it comes to traditional assets, like
I think it moves a lot quicker than NAS does for me in the mornings.
Yeah. Oh, Louis changed to long gold. Man, you are on fire right now, Louis.
Doing all right.
Nice.
Well done.
Wow, and silver too. Oh, silver is crazy as well.
See, I don't touch silver. I used to touch gold. Many accounts blown on gold.
Gold is extremely difficult. I agree with you.
I wouldn't go back. I couldn't go back there.
I had a strategy that I was trading on an evaluation account, which worked very well in the beginning, and then suddenly, mid of the year, it stopped working. It's like, and ever since, it has not been working anymore. I almost blew the account because of that strategy. So that's interesting. It's something I encounter more and more, by the way, that strategies that used to work for a long time very well suddenly stop working. I think it's because of AI, enabling people to do things and analyze edges that prior to this, the normal retail trader was maybe not able to do. Oh, look at the cutie.
He's joining us.
They always like to be petted, no? Golden retrievers.
Oh, he's a pain, absolute pain. He should be asleep now. He's had an hour walk this morning.
Oh, maybe he's so afraid already because of the bang bang going on.
Yeah, no. Well, he normally sleeps at my feet when I'm working, but I got for Christmas one of them hot water bottles that you put on your feet. So it's in his way, so he can't lie down right now.
Nice. Mr. Silver, nice name, by the way. Can I buy 2.5 high stakes program, as many as I want? A maximum of 2 you can buy with this offer. So that would be $12 per piece, $24, pardon me. In total, make use of that. Total of 2. We have Antokahoro, I hope I'm pronouncing this correctly. I'm short gold, targeting the current London low with a risk of 1 to 2. Yeah, nice one. I honestly speaking, if you would like put a pistol on my chest right now and ask me what position do you choose in gold, I also would more tend to stick to a short position at the moment, just because from the looks of it, I don't like that we really pierced so violently without much resistance through the last all-time high, and then closed well below. So the typical pattern, if I have to make an assumption, and probably later on the actual price action is going to prove me wrong, would be, well, something like this, that we kind of struggle up here a bit and then continue down, or at least maybe not today, tomorrow. Let's see how that is. Test kind of the lows here around 4,300. But nothing where I say, oh, I need to trade this, this is going to for sure make me a lot of money. However, from risk reward, actually, where we are right now, this is like a
What's the lowest risk reward you'd go for?
At least I would consider this a swing trade. So it should have a minimum of 1.5. So if we enter right now, you probably would say something like, latest here, I need to get out again, maybe a bit earlier. Risk reward of 1.5 would be somewhere here, which is okay. It's like still.
I like a 1.5. That's what I do on NAS. I like a 1.5.
Yeah, it's like, of course, I prefer 2, but it's a psychological thing, in my opinion, as well. Again, if you only focus on something like 1 to 2 or 3R or something like this, you have, of course, way less trades hitting your profit targets. So you end up very often with something like the trade goes like 1.5 into your direction and then reverses to your stop loss.
Oh
So
yeah,
you would need
100%.
to incorporate something like at what point do I move my my stop loss, for example, to break even, and it's which comes at a cost again then as well. So I'm the more I do this on the lower time frames, the more I came to the conclusion, just as I set one stop loss, I set one take profit, or I have something on some strategy like at a point where a trailing stop loss gets activated, and then I fire and forget about it, and I don't look at the position anymore. And if something happens, I get a message on Telegram from the software that says like, oh, I've entered a trade here, or the trade was stopped out. This is what happened. It's ended up in a profit or stop loss.
See, I don't go break even. I just have stop loss or take profit.
Yeah.
That's it. I don't go break even. I don't trail profits. If it's for me, either wins or it loses.
I have the take profit. The trading stop is something that activates when the position is already in profit.
Yeah.
And when the trading stop is also already set in profit.
Okay.
But also, this doesn't work on every asset. Like in euro dollar, I cannot do that with a strategy.
No.
It just doesn't work. Works on Bitcoin well, on crypto well, but also only well if the order books are normal. Like yesterday, we had like order books that were a bit crazy again.
Yeah.
And when you get like stopped out, something you cannot, the order book spread, something that's extremely difficult to backtest also, because basically you would need data down to the microsecond. Cambam69 is asking, Dirk, why do you think automated system robot can perform in irrational markets where the best traders are trading the current price rather than robots that run on past data? So I'm not necessarily saying that robots always can outperform discretionary trading, but not everybody, including myself, is a good discretionary trader.
Yeah.
Because I don't think the markets are irrational. I think they are very rational. It just we cannot see the rational in it with our limited capabilities and our human brains. But I, as a discretionary trader, am very irrational, which shows like that I maybe would move my stop loss sooner to break even than I anticipated, or that I take profit earlier because I want the good feeling of that I have when I close a trade with profit. I think that's the irrational here, and this is something I like or I want to take out of the equation because I know this is one of my weaknesses. So the natural thing to do here is to try to automate some stuff that I know that works already, not from backtests only, but from past live data where the strategy was traded, and then let the bot works its magic and take my feelings and the mistakes that I'm prone to as a trader out of the equation. There are you need to decide for yourself through experience on what side of the spectrum you are. Are you somebody that is very good as a discretionary trader, which can be true as well? I know a lot of people who are excellent discretionary traders that are very disciplined, that don't need like a fixed stop loss, fixed take profit. They somehow can see things in the chart that I cannot see, for example. And then there are traders like myself, for example, who know their psychological flaws and try to circumvent them through, for example, automating things. That's the beauty of trading, no? I mean, there are many ways to roam. As you can see here already today with Ashley and me. Ashley is a totally different trader than me.
Yeah, I don't have any bias to my trades, so I could automate my trades if I wanted to because it's strictly no bias, it's just rules. But I like doing it at the moment. It will get to a point, probably in about 10 months' time, where I will look to automate what I do, especially while I'm traveling, etc. But for now, I'm just collecting data. But it just, like you said, it just depends what type of trader you are. If you're like me, where you don't have any bias to the market, the only bias I do have is news, but you can just flick you automated.
Yeah.
It's just whether you trade or you don't trade. There's no bias of where my take profit is really. My stop loss is my stop loss, and I'm just very mechanical.
Yeah.
So for me, automation would work really well.
Probably, yeah. But for you can take yourself pretty good out of the equation then already, which is something I cannot do. It's like,
so you have to learn. You have to be really honest with yourself, don't you, to see what works best for you. And it takes a lot of learning. So we've both been through a lot of learning curves, and I think we're both finally at a position where we're doing okay.
Yeah. And that's nice, with all the people, all the hosts we have here that are streaming with us. Later on, we'll have William and Richard coming on again. Everybody is like different, but everybody found like their own niche, their own edge, how to approach the markets and how to become profitable. And it's beauty because it's the proof of how many different ways, probably unlimited ways, there are really to find your alpha in the markets.
Correct.
And yes, Kambam, I'm talking about trade management, risk management here, because, clicking on buy or sell is the easy part. Everybody can do that. It's what comes after this. How do I manage the trade, which is difficult and which determines, at least in my opinion, do you have a chance of becoming a profitable trader, or are you going to be one of the 90+% that midterm, long term are going to lose money in the markets? Yeah. We have, I can see, like a lot of people can probably relate to what we are discussing here, but I can see that by the comments. So it's obvious that everybody is going through a phase like this where you need to decide what type of trader am I? And you need to be realistic. In the beginning of my trading career, I always thought I'm this low time frame scalper that trades like 100 trades every day and stuff like this. Well, it turns out what I'm really good is long-term forecasting and picking positions that I'm going to hold for the next 3 to 5 years. Totally what I didn't expect. Now, in the past year, I've been returning more to lower time frames, and I can still see, well, this is like, even for me, still a steep learning curve and a lot of things to factor in until I can become not always profitable, but net profitable, and not return after a couple of months to where I started. Heidkin saying, I'm doing my own trading bots at the moment. In 2 months, I am developing it, almost reaching the end of it to be usable. Still many things to fix. Yeah, that's one experience I made too with designing trading bots. There's more to it than you notice. Like there are a lot of things, especially when it comes to managing positions, that can go wrong. If you have the chance, always test your trading bots first on either demo accounts to ensure that the execution logic and the risk management and position management logic is correct, or on something like testnets. For example, in crypto, I trade over an APR with Bitmart, and they have a testnet, which is one-to-one what is going on the order books for the perpetual futures, but you can try out the order functions API calls without actually risking money, and you can see what goes wrong. And as I said, there can be a lot of stuff that goes wrong. So usually I'm developing a bot maybe within 2 weeks nowadays, because I know my way around, and then I spend another 4 weeks on bug fixing, debugging. This, I think probably every developer out there can very much relate to that as well. Bug fixing. Good. What else, guys? What are you in at the moment, position-wise? Is there anything you would like us to look at? We still have Ashley for another 12 minutes here with us.
12 minutes remaining.
So knock yourself out. Any questions for Ashley you always wanted to ask? This is your chance.
I'm going to close my trades now, my trading screen, so I don't look at them. It's quite nice just to keep back testing, isn't it?
Yeah. Are you doing it in a manual way?
Yeah.
Yeah. Wow.
So this is what we need to discuss, because I do everything very manual. Can we look long NQ? Someone's in.
Long NQ is.
Can we look at New Zealand dollar?
Somebody was asking if NASDAQ trend is bearish short term. You want to talk about that? What is your opinion? Is it bearish at the moment short term?
I could see us going bullish.
Yeah.
It depends what. So I trade on a lot lower time frames than a lot of other people. So I never even go up to the hour. But no, I can see that going bullish. What about yourself?
Well, maybe I want to ask Manfred Bryan, short term, what are you looking? What time frame are you looking at?
Yeah, what time frame?
Because we might have a different definition of short term.
Because obviously I'm very 1 minute. So
Which is
I had,
something, at least for NASDAQ, I'm not looking at all.
yeah, so I had a bearish and a bullish trade today, and they both won. So my view on the market is a lot different to somebody who's looking at it on, say, the daily or even the hourly.
I mean, short term, if we just look at November and December, yeah, you could argue, of course, now that we are somewhere within. It's not a bear market yet, but it's something like a compression. Let me put it like this. I would call it maybe. So while the market is volatility is getting lower and lower until maybe not, you're going to get like a squeeze either to the upside or to the downside. January always is a bit a difficult month for stocks, not always, but often. So I wouldn't be surprised to see the breakout actually to the downside. That is if we fail now in the next day's break to the upside, of course.
Yeah.
This is as short term as I would get there, because with my other systems, the one I showed that I'm trading on NASDAQ right now, I don't really care about what the short term trend is. It's just not biased into any direction there. I have too many windows open.
30 minutes.
Mhm.
They've just said.
Yeah, Heidkin, yeah, Python. Absolutely. Also, everything I do trading wise is in Python, which is because this is the language I'm not going to say I'm decent at when it comes to coding, but somebody who's not a very good coder is like the most easily accessible one. I know people also who trade their bots in C++, because it allows them to make the bots faster when it comes to execution. But I don't know anything about C++, so I'm also sticking to Python. The nice thing about Python is, in my opinion, you have a lot of libraries there that you can dig into, like people that made already parts of the work that you need, and you can just access their libraries for that. I like that. You don't need to invent everything from the start every time again. Good question. According to your experience, which works better in real markets, algorithm, bot trading, or human trading, and in what market conditions does each one fail? For me, long-term human trading works better. I'm better than any bot or algorithm I yet have to meet when it comes to longer-term forecasting and position picking. Maybe it's because, like with the weather, the longer we look into the future, the more variables go into the system and make things more complicated. I think when we look really at short-term trading and like at super, super low time frames, a bot will always be better. Not always. It depends on the bot, of course, but the bot has the better chance of being the better trader because it can execute faster. Like, because for me, if I trade something like tick charts, for example, the time it takes me to click onto my mouse to buy or sell an order, a bot can do like 100 trades already. I'm exaggerating right now, of course. So where it really depends on execution time, where it's of importance whether your trade is executed within 2 seconds or within 30 milliseconds, I would always go with a bot. The difficult thing is, of course, you need to find a bot, and you need to accept that your bot is probably not going to be profitable in every market regime. Because, I mean, by the nature, the underlying strategy is probably going to be either a contrarian strategy, which is going to work in sideways markets, or is going to be a trend following strategy, which is going to work in either up or downtrending markets. A strategy that works under all market regimes, I don't know any, honestly speaking. So parts of the work, in my opinion, is always to first do the work or train the bot on identifying what market regime do we have at the moment. Are we in a trending market? Are we in a sideways market? And this is easier said than done, teaching a bot to look at the bigger picture and decide, is this a trending market or is this a ranging market at the moment? Okay, 30 minutes you're looking at. So let's change here quickly to 30-minute charts. I need to take those out, otherwise. Here we go. Ashley, are you still there for 2 minutes, maybe?
I am. I'm
Yeah,
there for.
because then I really, really quickly could go somewhere and then come
You
back.
go. You go to the toilet and come back.
Thank you. See you guys in 5 minutes or 2 minutes.
I don't know how I click on people's questions. Let's have a look. Has anybody got any questions? I'm scrolling up. If you could put a question in, that would be very Oh, if you're a newbie, how many pairs should you focus on? 1 or 2. I made the mistake of focusing on quite a lot when I first started. You just need to get your head in the game of just clicking the button at the right time, and not second guessing yourself. So 1 or 2, start off 1 and then go from there. But that's the biggest thing. Trading's the easiest part. It's your head around it, of coming out of a trade too early, getting in a trade too early. You just got to stick to your rules. So as long as you've got that down, that's when you can start looking at other pairs, I would say. Who else? Where are you from? Guess. You should be able to guess. Show EU, madam. Okay. Where are we looking? I don't think I can because he's on his screen. Let's try it. I am Europe. I can't change the screen because he's the one in charge. So unfortunately, I can't change my screen. Oh, here we go. We've done. So do you want to go to EU today? So this was my trade today. So quite simple. So as you can see, we pulled back right into this area. So here we pulled back. We had a little sweep of Asia and then a drop. Look into a sweep of Asia on EU and GU as well. It's very easy. Simple. So it happened same again yesterday. So either a sweep of Asia or a sweep at the bottom or the top of Asia. So here we had it again. Here we had it. So it was in, lost, and then I was in again. It's a nice trade on my personal. Sweep of Asia. You can look at fair value gaps. Push. All it is, find a pattern. There were no trade from me here because we did sweep. I would have looked to see if we're bouncing off anything nice. So that probably would have been a loss there. Not Sweden, from the UK. There we go. That looks like there's a lot of news that day. Here we go again. Sweep. Came back to the consolidation. Swept. Push down. Easy strategy. Just have a look. Make some rules up. See what happens. I'm going for 2.5 hours each time. As you can see, quite good results. Here I would have been in, and then I would have gotten my rules there. I would have gotten again, so I would have gotten about here. Push up, so that would have been enough of a win. I'd had a percentage on, usually, if I've had a loss. I'm a red. Here we go again. We'd had a sweep. So after a certain time, we'd come back to a consolidation area, push up. Easy. That's all it is. That's all I've done is I've just looked for, watched a million YouTube videos, learn Africa, learn the basics, and then just tried to find a pattern. Looked at a few indicators that I liked. As you can see, I've only got 2. One showing Asia and one showing just a slight EMA. Hi, Dirk.
Hey.
You
So
feel better now?
much better.
Everyone was guessing where I was from, and we was going over EU.
From the UK, you know.
Yeah, well, somebody said Australia and
Oh, yeah?
Europe and Sweden. I'll take Sweden.
Sweden, nice.
Africa. I do like Africa.
South Africa, yeah. But I think your accent is like very British.
Very British. Yeah, very
Just
northern.
like my English speaking accent is very German. So
Yeah, so I'm from Manchester, if you cannot tell from
Manchester.
my accent.
you Manchester United fan.
I am. Somebody just asked that, so I'm a red. My other half is an Arsenal fan for some
My
strange
God.
reason.
How's that working out?
Yeah, it's not that great. Not that great. Not that great. But no, I'm going to have to love you all and leave yous.
Sure. Pleasure having you with us again today. Thank you for your input and for sharing your very profitable trades with us this morning. And yeah, I think there's nothing left besides
Have a
wishing
lovely
you
new year.
a lovely new year and see you again in
I see you all
2026.
soon. Liverpool. We don't talk about Liverpool on this chat. See you all
Well,
later.
my heart is a little bit with Liverpool because of
No.
Jurgen Klopp, of course, back then.
No one's heart is with Liverpool. See you all later. Bye.
Take care, Ashley. Bye-bye.
Bye.
That was Ashley. Thank you again, Ashley. As always, a pleasure having you with us as well. So I think I still owe an answer to somebody when it comes to the NASDAQ, the 30-minute chart. So let me quickly look at that one and remove my crude drawings here. If there's like one thing in the world, guys, that I'm not good at, it's drawing. So, well, it's a ranging market. Short answer. Short term. Very short term, let me put it like this. So if we really just look at what is going on here, you could, of course, say, well, it's a bit of a downtrend. However, you have here a zone of compression also again on 30 minutes. So I would view it like this, that it's undecided. It's in a miniature way, the same structure we have if we zoom out a little bit. And this shows the fractal nature sometimes of markets. So I would expect either also here today, that is a breakout to the north or south. However, I don't expect we are going to see much of a breakout or much things going on there until later the session. Probably we will need to wait for New York coming in. Alrighty, good. Dirk, what is the process of having a bot when using MT5? So it depends, no? Depends on your entry logic. You could either write directly in the native language of the MT5, of a MetaTrader, which is called, I think, MQL. You can write a bot and then compile it into a so-called expert advisor. So that is part of it. Or if you rely on external things, like, for example, a lot of my trades are triggered by alerts on TradingView, then you need something like a bridge that sends the alert or translates the alert into a trade on the MetaTrader. There are some programs out there that do that. One of them, I think, is named Pine Connector, if I'm not mistaken. Pine Connector. Yes, so this one here, which I don't know what the price is. So this one will connect your MetaTrader to TradingView, and every time you have an alert on TradingView that fires, for example, a buy signal or sell signal from an indicator or whatever your entry logic is, it will translate this through this Pine Connector software to your MetaTrader 5, and you will pay for this. If you want a little bit, if you want more than one account is like $39 a month, $79 if you have more accounts that you want to connect. So yeah, you'll have to pay a little bit for that. The alternative, of course, to this always is to come up with your own solution. So this is what I do. I have my own Python server that is running a bridge to MT4 that I coded myself. Why did I do that? Because I long-term do not want to rely too much on third-party software. It's not even like that you pay like $79 for a service like this. If you want to become more professional in your trading, there is a point where you will need to have invest money into your trading infrastructure as well. Nothing is going to work always when the expectation is that everything comes for free. But there are tools out there, I'm sure also different ones than Pine Connector. As I said, I have my own solution for that I run on my servers because I want to be independent from third-party software, because I don't know if its third-party software is still going to exist 3 months, 6 months down the road, or a year or two in the future. I have been using some services in the past that went out of business. Well, and then you start at square one again, right? You need to find something else. And this can get pricey, or you miss days of trading because it takes time to set up new stuff again. So eventually I created something for myself. If you're not a coder, it's totally okay. You can task somebody with doing that for you. Of course, you'll need to pay that person as well, or maybe even vibe code something like this, which is also possible. Takes a little bit of experience, but is not out of the question. Good, guys. So what I would like to do, since we have still a while now until William and Richard are going to join us, I said this in the beginning of the stream, I would like to go through a little bit of a tutorial to show you guys how you can use something like ChatGPT, or we are going to use Claude here because I like their language model better than ChatGPT, honestly speaking, to kind of get a first idea when you work with, for example, indicators. Are these indicators really working? Can I convert them into, for example, a possible trading strategy, to kind of get the first view of this indicator that maybe looks like awesome, and in a presentation that seems to give like super precise signals. Does it really have an edge, or is like what I'm seeing there maybe just a coincidence? And we are going to, as I said, use Claude for this. In reality, I would even use Claude Code, which is the part of Claude, of a language model that comes as a command line interface, which specializes in coding. But it looks like very crude. It's not so nice to show, in my opinion, and we want to stay within the browser. So I'm going to use Claude. Claude you can access via claude.ai. In the beginning, you don't even need to invest money into that. However, I'm on the Max plan, which cost me $200 a month, but it's worth it, in my opinion, because it takes a lot of mundane coding task, analyst task off my shoulders in order to test if certain things that I think I'm seeing in the markets really have an edge. And we want to do that. We're going to create a new chart here. Let's call that one our Claude indicator test, maybe. And since a lot of you guys are always trading gold, let's go with gold. Can just see how much data we can get from Endeavor. I'm going to get rid of the volume for now because it's tick volume. It's not real volume. For that, we would need the gold futures. Claude Code is really the way to go if you want to get a bit into vibe coding. It's by far the most superior model out there when it comes to coding tasks. Very much agree with that. And so let's select let's stay with a 30-minute chart here. And I'm just going to use, like, off the head, I didn't prepare anything for this, an indicator of a shelf. So typically, sooner or later, anybody that is into trading will stumble upon the RSI. So the classic definition of an RSI is if price is above 70, that means the market is so-called overbought. Meaning maybe a sell position would be the position to choose. If the RSI drops below 30, then a buy position is the one you should choose. So I'm now going to zoom out to have a look how much data is available from Oanda. The more data we have, the merrier, of course, the whole thing is. And it seems, we're already in 2024 now. Very good. January 2000. So we have almost 2 years of data. What I want to do now is I want to download this data. And this is an option that is very valuable in TradingView, but actually not used by many people out there. So what you can do is you go up here, and then you click on download chart data. You have the choice between a Unix timestamp or time, it doesn't really matter. I usually with Unix timestamp because we are not going to do analysis of different time zones, for example, now. And then I click on download. So it's downloaded in a file that's called CSV, which stands for comma separated values. And then I'm going to upload this file into Claude Code. Here we go. So my file is now uploaded via Claude Code. And the question now is, of course, how can I go about and use Claude to analyze this data now? Now, there are different models here, by the way, as well. If you have the chance, go with Opus 4.5. That is the most capable model really for a lot of work you're doing. If you're on the free plan or the lower tier plans, you'll hit a wall also because you cannot use it very much. However, as I said, since I have the highest plan there, we should be just fine without hitting limits there. Now I'm going to ask Claude the following. I just uploaded a CSV file containing price data on SAU US dollar from 30-minute 30-minute candlesticks. There is also an indicator called RSI included. Please use Python. So I want to tell it here to use Python. Sometimes it likes to use, for example, JavaScript for whatever reason. I don't know. Python is prone in these large language models, or when large language models use Python, they are prone to make, from my experience at least, less mistakes. To analyze the data and get back to me. So I'm just starting here with a very generic general thing. All I want to do right now is that Claude Code has a look at the data and tells me something about it, because I want to make sure that Claude in a way understands what it's seeing there. I'm not interested now in like getting already an opinion on is RSI working or analyze patterns in the data and so on and so forth. I just wanted to have like a general view, get back to me so I can see, yes, this language model understands the data. And then I can start inquiring about more from the data and tell it what I really want. So you can see here in the background now, it's creating on the fly a Python script, which never ceases to fascinate me, because exactly this is something you would have done in a manual way. So if we would have talked, for example, just 2 years ago to each other, I would have done this in a manual way, and it would have taken me a couple of hours, obviously. And this is done now in a completely automated way. So obviously it saves you a lot of time. So it says already a good data structure. I see open, high, low, close, RSI based moving average. Correct. That's the yellow line here. And divergence signals. Interesting. Let me run a comprehensive analysis. So here's my summary. RSI findings, times in zone, so oversold only 1.4% of the time, oversold above, below, he says below 20 now. Classic interpretation would be below 30, overbought, so above 80 in 8.5% of the time. This is already interesting, so it's more overbought than oversold. By the nature of things, of course, because we have gold trending upwards for the past years. Current technical state, session insights, very interesting. The most volatile gold seems to be around 2 p.m. UTC, because there's the London and New York overlap. The least volatile around 9 p.m. UTC, which is the end of the US session. And that Thursday shows the highest average returns. Very interesting already. Note the divergence columns appear empty in this data set. The indicator may not have triggered any signals, or the data export isn't capturing. We're not interested in divergence anyway. So Want me to dig deeper into anything specific? RSI edge analysis, optimal RSI entry exit levels, or backtesting some RSI based strategy? It's very smart already, the model, because we want, for the sake of it, to do exactly the last one. So I want to tell it, I want you to backtest if the classic RSI strategy with buying below, buying if the RSI is below 30 and shorting if the RSI is above 70 viable. Again, staying at this stage very generic, because I'm not bothering yet about, including any trading fees, including spread, slippage, and stuff like this. We are just at the phase here where we want to analyze general patterns. And this is, the classic interpretation of the RSI, to buy if the RSI is below 30, meaning the market is oversold, and to short the markets, to sell if the RSI is above 70, meaning overbought. Again, using Python here, creating a backtest strip. So we're going to give it some time in the meantime. Let me just quickly scan if there are any questions. Yeah, this is what DJ Warhorse is saying here. That you hit the limits with just 2 prompts with Claude. This is if you are on the free plan, where you will very, very soon hit a wall that you don't have any tokens left anymore, for example. So you're using DeepSeek, which is okay. It's 100% free. From my opinion, however, when it really comes to coding later, Claude is far, far superior in comparison to any other model out there, including DeepSeek. For the sake of it, I have to be fair here. I have never tried DeepSeek for coding, honestly speaking, so I might be wrong on this one. But for me, it's really worth investing those $200 into Claude every month, because if I translate that into how much time it's saving for me, then it's really well worth the money. Yeah, this is also good, to use multiple large language models to do the coding, and then, for example, use another model to bug fix, for example, or to check the code, for example. Good. Let's quickly see where we're at right now. Fascinating results. Here's the breakdown. Backtest results. Summary total trades 363. Win rate, however, he defines that 62%. Profit factor below 1, 0.81. Total return minus 21.5%. Max drawdown minus 30% almost. And buy and hold would have returned plus 111% over the time horizon. So this is one thing that is important. If you are getting into algo trading, you should always compare the results of your strategy also to what would have been my return if I just would have had a buy and hold strategy. So if you trade, for example, indices like the S&P 500, the S&P 500 historically has a return of around 8% per year. So your strategy needs already to have a higher return every year than 8%. Otherwise, in my opinion, at least, it's not worth trading with. Verdict: strategy not viable. Despite a decent 62% win rate, the strategy loses money because the losses are greater than the wins. And critical findings: long-short asymmetry has, and this is very interesting, has a good return. So when we bought at an oversold market, so when the RSI was dipping below 30 or was at 30 or lower, the strategy is profitable. Why? Well, it makes, of course, sense, because gold is in an uptrend for the past 2 years already. So, of course, whenever the RSI dips below 30 and we buy there, that makes a lot of sense, right? That this works out. Does that mean that gives us an edge really? No, because this is something that we could have already found out, of course, without using Claude. So short, sell overbought, 209 trades, win rate 57.4%, but a total return of minus 30.9%. Of course, because in a trending market, the short signals from an RSI are not going to give you an edge. This makes perfect sense. So he comes to the same conclusion than I did just now. Gold went from 2,065 to 4,387 over this period. Shorting overbought conditions in a raging bull market is a losing game. RSI can stay overbought for extended periods during strong trends. And each short that fails costs you dearly. Recommendation, long-only variant, tighter RSI thresholds, add another trend filter. This confirms why pure RSI mean reversion fails. So in order for both filters, long and short, to work, we would need actually a ranging market. So we don't need to run a backtest, of course, here. What I'm more interested in here is now, how did Claude get to this? Where were the entries? Where were the exits actually? It's one thing, of course, that the model tells us, well, if you sell, if the RSI is above 70, that leaves still the question, where do we get out of this position? Where was the stop loss that it came to conclusions like this? And so this is something I want to ask it now. For your analysis, where did you assume that a trade was closed? So I want to know now the exact logic. Yeah, when did he close the trades in the simulations? Because otherwise it's not going to be worth anything for us. Good question. I should have been more explicit about this assumption. Okay, he actually used exit rules because, and this is quite new as well. Like a couple of months ago, you wouldn't have gotten this, that Claude or any language model automatically also already defines a logic where a closing of a trade is there. He would have more calculated with average returns, for example. So in this case, he did it. He said, well, when we bought, when we went long, so RSI below 30, we exited the trade when RSI crossed above 50. Or for short, vice versa, we sold over 70 and we exited the trade when the RSI crossed below 30. So it's kind of a mean reversion neutral strategy. Claude assumed here, and this is totally okay to do that first, that markets always like to return to the mean reversion, to the normal state, which is defined in the RSI as the level of 50. So in this case, it would have bought somewhere here, which actually was a great buy, I must say, and would have exited here. Let's see, mark that, for example, with lines. This one. And exit here, which is a decent trade. No, actually, it's not really, no? No, we would have gotten here into the trade. That would have been a losing trade. So what can we do now, actually? We know now when it comes to long entries, there is somewhat of an edge. It can help us to kind of define where could be good entries in a trending market, in a strongly trending market like gold, but it doesn't yet give us really an edge, in my opinion, at least on this. So what we could do now is, and I'm not going to do that now because we would go too far down the rabbit hole, but typically what I would do now is I would add more filters. I would test, for example, if I add moving averages to the mix on the chart, like a 200 days moving or 200 times 30 minutes moving average, since we are working on the 30-minute charts. Or you could add something like price action. Yeah, please have a look when you have a combination, for example, of an overbought RSI Plus, you have certain candlesticks patterns or price action patterns, like bearish engulfing patterns and stuff like this. Does this give an indication that short trades which are using the RSI become more viable and are giving us an actual edge? So you can add more and more to the mix then, and sooner or later you'll either come to the point where you have to accept, and this for sure would be the case with such an overused indicator like the RSI, that there is no edge, or you find something that actually works and that potentially can beat this buy and hold strategy and gold. And this is then the case where I would take these findings and then translate them into a whole strategy. For example, create a trading view indicator out of this, or create a strategy that I can backtest using Python. It would go too far now to do that because it would take also some time to find an edge yet. However, I wanted to show you something like this, that these tools like Claude, like ChatGPT, or DeepSeek, like some of you are using, are really viable tools nowadays that can at least, I'm not saying it's going to guarantee you that you find a strategy that is working, but it can help you to quickly analyze, is like a certain indicator in the classic interpretation actually something that is working? Or do I need to modify it? Or is it something that's not working at all anymore, in a neutral way, without you having to go through the whole chart like one by one, which is going to be prone to a mistake, which is going to take a lot of time for you to. It still doesn't save you from that. You should always do a reality check, of course, but it will help you to get a better picture on, is this something that can already work with strategy by itself? Or is this something that is absolutely not working? Do I need to change anything within the strategy? Do I need to add more filters to get, for example, confluence, moving averages, or slow stochastics, stuff like this, and then see, like, if all of these align, are those then good trading signals, or are they not good trading signals? As I said, it's like, don't understand this as this is the only way you can do this. I just think it saves you an enormous amount of time. And then if you find something, then you can start translating this into a bot that is, for example, on a demo account, forward testing your trading strategy on a live demo account, for example, an evaluation account of a Fivers. This is at least how I do that, not for the RSI, obviously. Because it's an overused indicator. I don't think there's really value in that one anymore. And this is true for most of these indicators out there that you find in classical chart literature. And but it can lead also, at least for me, that was the case often, to me finding something and then creating my own indicator out of findings that resulted from this. This is, for example, the case for the one I'm here, for my real-time swing detector that I want to start using on euro dollar as well. This one works very well on cryptocurrencies at the moment. And I'm testing this right now also for euro dollar, where you can see, well, looks, quite decent as it seems, the signal. This is an indicator that was born out of other indicators, out of price patterns that I analyzed actually with the help of Claude. So I had an assumption in the beginning, and then I ended up somewhere totally different, but still found something that worked, which is great. So it doesn't save you. It's not a foolproof method that is going to make you profitable, but it's going to help you to find in a quicker way things that might work, and differentiate yourself from things that that you are wasting money on, which in my opinion in RSI would be. I don't know if anybody of you guys is somebody that uses the RSI and is successful with it. For me, it's like one of those typical indicators that doesn't have any edge because everybody's looking at them. Good. Let me quickly go through the comments here. Oh yeah, I like this comment a lot. Let me quickly drink a bit of coffee. The most difficult thing in trading, Juanka is saying here, it's what I can do while I am waiting for an opportunity to trade. Do you have any specific routine while you are waiting? There's so much truth in this. Joanka, it's difficult to stay patient, and it's difficult and hard to accept that sometimes there are days where there are no trading opportunities, right? And you kind of feel as the day progresses like, oh, I need to trade something. Otherwise, I feel like I have wasted my day. And I think you need to see this in the exact opposite way. And this is in the beginning hard to accept, that every time you do not take a trade, that means the trading setup probably was not perfect for you. So it's actually good that you didn't take the trade. Concentrate on the rare, almost perfect trading setups. The problem is that a lot of marketing out there from brokers, not the fivers. They have, of course, a different approach. They want you to be successful, but like the typical cryptocurrency broker or Forex broker out there, their approach is they want you to trade a lot, because if you trade a lot, they earn a lot of commission on you. Some brokers also take the opposite of your position, so mean they earn money when you lose money. And since around 75 to 85% of traders lose money net, it's of course very profitable for you. So they kind of, their programs, their software, their apps are designed in a way that that you get incentivized if you trade a lot. But the truth is, and this is why I'm such a fan at a certain degree of automation, because I can do other things than staring at my charts and waiting for an opportunity. So why should I sit the whole day here in front of my chart to wait until a new sell signal or a new buy signal appears, when in reality I can have that, at least at one stage, this system is not there yet, automated, and I can just concentrate on other things where I don't need to look at the charts and be afraid that I miss opportunities anymore. This discipline of staying at the sidelines, it's extremely difficult. I've struggled with this a long time as well, especially around Christmas, for example, so where you have extended periods, for example, 2 weeks now, where we don't have like a lot of volatility in the markets, and thus also not so many chances to trade. Very difficult, something a lot of traders, even professional traders, still struggle with if you're trading in a manual way. Yeah, Darkose is making a point here. This approach to backtesting can work, but I encountered a problem depending on how the model sets up the entry. The good thing is here, I told it where the entry is already. I told it every time we drop below 30, it's a buy order. Of course, we would need to go now into the trade details. So I would ask Claude to show me the last example of this, and then I would compare manually with the chart. Did it enter, for example, on the closing price of a candle? I think more realistic would be something on the opening price of a next candle. Then you would add something like slippage, because you don't have perfect trade executions to the mix. Where does it a stop loss, for example, is also something we did not have at all incorporated there. These are the things you do later. I think it's important not to have too many details in the beginning when you're at the stage of where you just want to get kind of a feel already, a notion, is this something that could be profitable, or is this something I'm wasting my time on? If I now see, for example, by adding more filters, well, this seems to be something decent. This seems to kind of be a valid trading strategy. Then I would go more into details and tell it, okay, entry is like this, exit is like this. Please also test like different stop loss levels. Like test if we have a stop loss at 0.5, 1%, 2%, or whatever your risk management is. This is part of a game, but in my opinion, at least at a later stage. So I want to progress towards that. In the beginning, I want to just keep things as simple as possible. Yeah, this is a great comment too. My strategy is hard to even explain it to AI. What should I do? In my opinion, a strategy that you cannot explain to somebody, that is an indication maybe that you don't understand your strategy as well, which is dangerous. No, with the exception, of course, if your strategy stems from some machine learning algorithm that is basically a black box, of course. But if you have problems explaining your strategy, you probably need to invest more time in actually understanding your strategy. But it's something good, you know. For example, I always use my wife for something like this if I try new things, and if I cannot explain it to her in a way that she understands it, I will probably run into problems trying to explain my strategy to AIs as well. Because the difference is my wife will, of course, tell me, Dirk, I don't understand what you're telling me there. The AI models that are coded in a way that they aim to please you are probably going to pretend that they understand me, and then they are going to do something totally different. Very important point that you're making here. And so try to be able, try to explain it to somebody who has nothing to do with trading, and if that person understands it, you have a higher chance that an AI model, a large language models, I don't like to call those AI, it's large language models, is more likely to understand you as well, in my opinion. Good. What do we have here? I still have 25 minutes left. So anything we want to look at? I can see people are trading gold. It's like one of the most popular assets within the fibers. Yeah, gold we are long still. Looks pretty decent right now. Let's go back to the daily. Actually, we can close this one and go back to gold here. Oh, God. Seems like we want to establish ourselves above the prior all-time highs again. So that looks very decent in my opinion. NASDAQ still going sideways. I'm very sure that we are later going to see some nice moves also in US indices. Do we have any trades today? No trades generated. Okay. It seems like from my option strategy, there are no trades today, which is not surprising because the volatility is very low at the moment. So, what do you guys want me to do? Yeah, you don't want to dump your whole strategy into AI platform. So at one point, I'm doing things manually, of course, because you're right, you don't know what this is used for. I deactivated in the case of Claude that they can use my my conversations with Claude that to train future models. So I deactivated that. But let's be honest here, by the end of the day, you don't know, are they really not doing this? Are they not eavesdropping into your conversation? Absolutely correct. The go-to thing would be, of course, to have a server running with your own large language model somewhere that you are using and nobody else is doing, but using that. But to set up things like this, it's, in my opinion, quite complicated. Plus, the overhead cost for stuff like this is also quite high because you need quite a large system to run your own model, at least run a model that is capable of what Claude Code, for example, is capable of. 4,400 to 4,320 you're expecting gold. All right. So I don't know. For me, it's something, the short trade here, although it makes sense from a risk perspective, I don't think it's a good idea to short trade gold. I would like to see a drop because I would like to buy here again at the 8 weeks moving average, but that is around 4,217. Sorry. I wouldn't be surprised actually if we close somewhere above the last all-time high So it looks nice in the books, and all the funds out there that bought gold can tell their clients that they have a lot of gold in the books. But not a guarantee. So I'm not a big fan of shorting gold, really. Thank you, mate. Sometimes not easy to translate things into a way that everybody can understand them, of course, because especially when we talk about AI, when we talk about risk metrics and stuff like this for beginner traders, I think that can be quite frightening, and of course we want to make things as easy as possible. Manfred Brian asking, aside from Renko, do you ever use Heikin Ashi candlesticks? I do, actually. Some of my strategies are based on Heikin Ashi. I'm a fan of Heikin Ashi also because it averages the price out. So we can make a example for this. So if I look at gold on a daily here, and instead of classic candlesticks, I select, for example, Heikin Ashi, it becomes more average out. So it's clearer to see trends, in my opinion, than on classical candlesticks. However, in order to make trading decisions, it's difficult, in my opinion, to use Heikin Ashi, because you would have the assumption that you, for example, sold at this price when in reality the price is up there already, because it's the candles itself are candles, of course, that average the price out. This is why I like to stick with candles with Renko for a lot of markets, a lot of my trading strategy, because it takes the it doesn't do the same, of course, like Heikin Ashi, but it also takes the noise out of a market. So each of this box here on the NASDAQ one is a price movement of 20, and Renko's all Renko charts care about is the actual price movement. So if the NASDAQ doesn't move 20 points up or down for the next 3 months, there's not going to be a new Renko box here. And I like this because it focuses solely on the price, and it kind of cancels out, not completely, of course, but it tends to cancel out the noise in between. Not completely, I mean, because you'll still end up with phases like this, where markets are just ranging, and where you also with Renko charts are going to lose money. Another thing you need to be careful about when it comes to Renko charts, especially later on when you base trading strategy on Renko charts, is that the price execution can be much worse than you think. So you'll very quickly have, for example, this long trade here should have been executed at 25,600, but the trade actually was executed at 25,604, if I'm not mistaken. So you will have slippage, and depending also on the frequency, how often you update those Renko boxes, how often they are calculated. You can see mine are calculated every second, but this is not possible for all trading view plans. So in a lot of cases, you'll end up that you need to use minutes. So every minute, for example, then it is checked and a new Renko box is drawn. So if I switch, for example, here to 1 minute Renko, well, not so much different to 1 second, but 5 minutes, you see, look already very different from 1 second Renkos, because he's just checking every 5 minutes, is the price there where I should draw 1, 2, 3, 4, 5 new Renko boxes. And then another thing is with Renko and Trading View, the combination. Trading View sometimes doesn't trigger alert messages correctly, so you end up missing trades actually. And yeah, most of my trading strategies are the ones that are profitable, at least, are actually based on Renko charts. But as I just said, it takes a lot of effort to make those profitable, because they look, just by the looks of it, they very often look very intriguing, like strategies that should be super profitable. But there's a difference between what you see on the charts and where you actually get executed. What is the best RSI and EMA for a daily time frame? I do not use the RSI at all. I think it's one of the, I stated this just now as well, it's one of the most overused indicators out there. And in the classical interpretation, it's for sure going to lose you money because it's only working in ranging markets. So if you find a market that is for sure ranging, yeah, you might be successful with the RSI, but in classic markets like gold, for example, like stocks, the RSI is, at least for short signals, probably not going to work for you because these are markets that trend up. Yeah, we sometimes have crashes to the downside, but if you look at like the last 20, 30, 100 years, stocks trend up. And in markets like this, it's very, very difficult to make money with an RSI, in my opinion. One thing what I would do when it comes to, let me quickly see what was exactly the question. When it comes to EMAs, on a daily time frame, I would always have, if you want to use EMAs, the 200 EMA. Simple moving, exponential moving average, 200. And then, I don't know, I'll make it orange or whatever. Why? Because this is an average that a lot of institutional traders look at. And it doesn't mean that you need to necessarily use it as a signal where you want to buy or sell or something like this, but it can help you to finally to make your own trading strategies more granular. For example, you could say in combination now with the moving averages I'm using here, which are weekly moving average, bull market support band, simple moving average 8 weeks. One rule, for example, that I have is that I'm only taking long trades. So I use pullbacks, for example, on gold to either the 8 weeks moving averages, especially the bull market support bands, to build up long positions in gold. And I'm going to continue doing so as long as price is trading over the 200 days exponential moving average. Should we at one point drop back underneath that, that would mean for myself that I probably would change totally to only take short trades. But you can see we are very far away from this. So if you want to use something like an exponential moving average, I think the go-to strategy really is to, in my opinion, use it as kind of a trend filter. Yeah, if we are trading above it, well, you probably do yourself a favor if you focus on long trades. If we're trading below it, you probably do yourself a favor of only trading short trades. This, of course, is, however, also not foolproof because markets like to range sometimes too, right? So you'll have also choppy periods where price is like kind of sometimes above, sometimes below the 200 EMA, but usually in trending assets such as gold, these periods are pretty short-lived. I would not use that for Forex, to be honest. So for something like euro dollar, because Forex pairs are more often in ranging markets than traditional assets such as stocks and gold in this case as well. Well, gold was a ranging asset for a long time as well. No, we just recently that it got a trending asset. So use it as a trend filter. Above it, well, only look for long entries because you have like the probability on your side then, as long as we're trading well above the 200 EMA, we are in a nice uptrending market. So picking long trades should be easier, should be by nature also heighten the chance of you closing later on the trade profitable in a profitable way than on when trying to search for short trades in a uptrending market. This depends, of course, on the time frame you're looking at. Like you said, you wanted it on a daily time frame. This picture, of course, can be totally different if you trade something like 1 minute charts or 5 minute charts or something like this. So really just talking about daily charts here. How to read the charts like a pro? Practice. practice some more. I saw a question earlier already. I'm not sure who it was. Somebody asking like, how many pairs should I start trading on? If I can give you one advice that I would give to me 25 years ago, it would be concentrate on one pair. Don't try to monitor like 10, 20, 30, 50 pairs and stocks and bonds and Forex and gold and crypto at the same time, because it's just going to confuse you. In the beginning, focus on trying to understand how to read a chart. And that, of course, means you need to understand how candlesticks work, for example. So the very, very basics I'm talking about here, obviously. But it's also important to kind of get a feeling, to kind of not to understand, but to get a feeling how is a market moving. Very essential also that you are able to identify market structure. Is the market currently trending or is it ranging? This is very important because it determines the basket of possible trading strategy that you can apply to the market. So for gold, obviously, it's easier. And if I'm on the daily chart, well, I mean, this is clearly a trending market. But you can also see on gold that sometimes the market goes into a range. So last time we had this from April to September of 2025, where gold was a ranging market. Then liquidity squeeze to the upside. In this case, again, you can see, for example, in gold, that actually happens every now and then. Before that, we had this structure here. Usually it's, for me, if I see like a sideways range and I can draw a triangle on it, then I'm pretty sure, yeah, this is a ranging market at the moment. Not always easy to identify, though. On a more lower scale, maybe we had something like this as well. So you need to identify, is this a ranging market? If it's a ranging market, with my trading, I can probably choose both short and long positions, and I should have probably contrarian trading strategies. So this is classical, where probably an RSI would shine then, or could be viable to use it. Or is it a trending market? Right now, we are in a very strong trending market, in a very strong uptrending market. And until market structure breaks, so until I get an indication that we are returning into ranging markets, or maybe even changing into a trending market to the downside, I only want to play long trades at the moment. It's of course not always easy to identify when does this happen exactly. So where's the point a market changes from a trending market into a ranging market? So one indication you could have is, are we still making higher highs and higher lows at the moment? And I think for gold, it's quite easy to see that, right? We had a higher high here, we just had a higher high here, and we have a series of higher lows. So until gold doesn't do something like, for example, going here again, then going up and failing to make a new higher high, I don't see that the market really has changed its structure there. This would be an indication of a ranging market. We had something like this, by the way, here, where you could have thought, oh, we failed to make a new higher high, so it seems like we have a ranging market. However, the 8 weeks moving average still acted as support in this case. So if you're able to do that, to identify, are we in a ranging or trending market at the moment, then you, in my opinion, you have already done at least 50% of the work. It's really as simple as that, and it will help you to not pick trades that are prone, that have a higher likelihood of, by nature, already becoming losing trades. What do I mean by this? As I just said, since I say at the moment, well, gold is clearly for me still in an uptrending market, why should I ever pick short trades in an uptrending market? It's like trying to catch the rocket, and you're going to burn your hands probably at the exhaustion. And it's much, much easier to try to pick long trades. because by nature, in an uptrending markets, price wants to go higher. So why should I force my trading? Why should I force my positionings against that? It sounds easy. It's difficult to accept, and of course, many times it's not as straightforward to identify if a market is ranging or trending. But this is like I said, if I could go back 25 years, this is the lesson I would teach myself before thinking about a trading strategy or to short or to go long. Identify first, are we in a trending or ranging markets? And by the way, this is true for all time frames. You will find the same patterns and change of market structure, no matter if you trade on daily, if you trade on hourly, or even 5-minute charts. The lower you go in the time frame, however, the more you probably have to accept that you'll have a lot more noise and that things become more difficult to identify. So that is my opinion on good old gold at the moment. Let's see how it is. Claude is a better programmer. I'm going to tell you what I know a lot of senior developers out there are not going to agree with me, but that's okay. And I agree with you. I think Claude Code has gotten to a point where it's at some levels better than at least junior programmers and better than a lot of senior developers, in my opinion, too. I have a friend who runs a IT company, and he actually is working now almost exclusively with Claude Code. So he doesn't hire any developers anymore. He's a very good developer himself. And he says, this can do things in a much faster way than I'm able to do. My job is more being a manager now and making sure that Claude Code or whatever model he's using doesn't go off rails, because this is something that happens sometimes. If you approach this and tell it, build me a trading bot for gold, well, then you shouldn't be surprised, of course, that it's probably going to work. Build a trading bot for you that is able to execute trades, but if that system is going to work and be profitable is on a whole different thing. So the more detailed you are in your approach, in what you share upfront with the model, and the closer you watch it executing the code, the higher the chance is that you are going to end up with a successful working piece of software, be that a trading bot or be that anything else. And so I think in the future, we are more going to be like managers, guiding automated AI coding agents to make sure it doesn't look oversight or implements things that we didn't ask for, because it just assumes things, just like as humans, right? And but the code execution is going to be very fast. It's surprising how that has changed really over the course of the last year. In the beginning of 2025, I was already using tools like this, but they were prone to make a lot more mistakes. So you had to monitor them very, very close, and they were prone to just assume things or take shortcuts if they don't see things working. But because most people are not willing to take the time to upfront, create a plan and create those rail guards for pieces of software like this. This is why a lot of people end up with having, crappy code. I can imagine the next wide-scale global app being built on an AI platform and going horribly wrong. One line of code that was verified only by one human AI manager. Yeah. I tend to agree with you. It can be It can go very quickly, very horribly wrong if there is nobody taking the oversight. But then again, like my friend who runs this IT company also told me, like, well, Dirk, I think the next models are going to be in a way that everybody can build apps, with like one line of command. So you're waiting for the bus and tell the AI coding agent, hey, I need an app that identifies food and tells me how many calories that food has or something like this. I'm making stuff up. Please code it quickly for me and hurry up, because in 5 minutes I'm going to be at the supermarket and then I need this app. I think this is the future. Whether this is a good thing or not, I don't know. In my opinion, use tools like this really as tools. Don't expect to export your whole thinking into them. that would be extremely dumb, an extremely dumb thing to do, in my opinion. Good. So we had quite a nice show, in my opinion. In a couple of minutes, Richard and William are going to join us. I can see one of them already in the background, and who are going to have a great show for you as well. Of course, I hope you liked our insight, not only from Ashley, who, in my opinion, is just fascinating for me because she's exactly doing what a lot of you guys want to do as well, working a full-time job, doing trading in the morning, having her 1 to 2 trades before she starts working, and when she's done with a day. So the live example that trading from your mobile phone, trading part-time is possible, that you don't need to stare non-stop at your charts and manually trade everything. I hope you also enjoyed my little, very shallow adventure into using Claude, for example. Hey, how are you doing, Richard? To identify if there's an edge in a trading strategy, if it's worth progressing with a trading strategy or not. If you like that, we for sure can do more things like this in the future. But now I want to take the opportunity to welcome William and Richard. Good to see you guys again.
Good to see you as well.
Hello there.
Thank you.
How is thy?
My day is good. I need to drink something. My mouth is running dry slowly.
Drink some water.
Coffee.
Water.
Coffee.
Or vodka, whatever you want.
Coffee water.
Coffee flavored water. Hot coffee flavored water.
Beer flavored coffee.
Coffee flavored beer.
Now.
Now we're talking.
Irish coffee style.
Oh, yeah, right.
Okay, but it won't be Irish coffee because Irish coffee is like a dash of like whiskey, isn't it?
Yeah.
Oh, really?
How would you? What new name would you give to it to make it beer coffee?
Well, it'd be German coffee, wouldn't it? Beer.
Oh, I hate whiskey, man. It's like,
Yeah.
no, I don't drink like hard liquor at all.
This is my Welsh whiskey that I filled up about a week or two ago. I don't know if you can see it.
Alcoholic.
You drank the whole bottle in a week.
About that. It's
Not
about
bad.
a week, 2 weeks, something like that.
No, I don't like whiskey. I'm a German beer guy.
Yeah, I love whiskey, mate. For all you know, I could have an Irish whiskey right now.
Who knows? Who knows? You never know.
I'm joking, guys. Do not panic. I am not drunk right now.
Don't do that. Especially don't drink when you want to trade.
I was going to say,
that
do
ends
not
up a
drink
disaster.
while trading. That is the worst thing you can do. I'm sure there's worse things out there, but it's definitely up there.
Yeah, but lowering your risk tolerance is not a good idea when it comes to trading. All in again.
Yeah, there's a order block there.
Talking from experience. So.
Yeah. Oh man, the closest I've come to trading drunk is I was super hungover one day. I went out on a big party session, and came in the very next day trading the London session, and I ended up. I think I took a trade and then I took out early. Went back to bed, woke up with an awful hangover because turns out, I thought I was fine. Turns out I was still drunk from the night before. Woke up and forgot that I'd even placed that trade.
Oh, classic. That's a classic.
Yeah.
One. Did it end up in profit?
I closed it in like just above break even. Yeah, just
you got
above.
lucky, man. You got
I'm
lucky.
very lucky. Like, the minute that happened, I thought,
error
oh
of
my
your
God,
ways.
never again.
Like Darkozy saying, for every 1 minute candle, one shot. How to get drunk in 8 minutes.
What are you talking about? 8 minutes, 3 minutes, man.
Depends on the shots. Yeah.
I won't see the close of the 5 minute candle.
Yeah, I don't think I'd be trading very long. Even if I was trading the 15-minute shot candles, I don't think I'd last very long.
No.
Probably last
No
about
way.
an hour at best.
No way.
Definitely not. Good, guys. All right. Everybody out there, thank you again for being with me for the past 2 hours. And I'm wishing all of you a nice last 1.5 days of 2025 and a happy start into 2026. Going to see each other again next Monday with hopefully more actionable markets again and not this boring sideline volatility, low volatility thing, with the exception of gold, that is, of course. Take care and yeah, bye-bye. Bye, guys.
Dirk, have a very good new year. We'll see you in 2026.
We will.
Oh yeah, Dirk. Fair point. I was going to say, Dirk, I'll see you tomorrow, but no, I won't.
Next year, the classic.
Yeah,
See you next
Dirk,
year.
I will see you next year, my man.
Oh no, that's so long.
We can make the joke on Monday. Dirk, I haven't seen you since last year.
Yeah.
Yeah,
Let's
but to
move
be
on
fair,
that
I won't even see you next Tuesday. I'll see you the Tuesday after.
Okay. Well,
I'll see you Monday, Dirk.
that's
Yes.
fair. At least one of you.
This very handsome devil will see you Monday though.
Take care, guys. Bye bye.
Dirk, have a great one, mate. Have a fantastic new year as well, bro.
Yo, what's up, Will?
What's up, Rich? Why I
Bruh.
feel very far over this side of the camera. Can I move it? No, wrong way.
Secondary trade's going well.
Yeah, nice man. When you put that in the group, I was like, oh, woof.
Yeah.
I would have taken it from a little bit lower. I love that trade idea. I would have preferred that trade that you've taken now over the first TP.
Ooh, I don't know, mate. Like this one to me is an A+, and this one is like an A. Yeah.
One to your right would have been so much sweeter. I was like, mwah, chef's
this structure here to me makes more sense than this structure over here. Now it looks the same, but it's not the same.
I suppose. I see why you'd say that. I just like the tighter consolidation.
Yeah. So this was the original trade. So it was just a 1-to-1. As we got close to this candle over here, having already broken this low point down here, I just pulled my stop to just above that last swing point over here. So just slightly above it. Left it for... It's still a 1-to-1 if you consider what was my original risk. My original risk was 40 points, and in this case it took 40 points. The same with this one. I have already moved it down. It was a 1-to-1. Aiming for this same point of the previous one, which was just this swing point yesterday where we had this nice volumetric movement. Got in on rough, just slightly higher than the previous trade. When we got this follow-up, so drop, base, and then drop, when we had this follow-up drop, I moved it to just above, somewhere over here. Just above, this swing point over here, not the previous one. Just above this swing point over here.
Yeah, nice.
So that is where I'm sitting at the moment, but this current turn that we're having here now, it looks okay. I would have loved if this candle that we're on right now started pushing lower, but still 3 minutes, we'll see. I mean, I'm already up 0.5% for the day. If I win this one, it's 1%. So
nice. Is this candle here going to affect how you feel on this trade? Is it still going to be a hard TP or stop loss, or like, are you thinking about maybe adding some discretion in?
No, I think this candle over here right now, when I'm looking at it, is like making me feel, maybe I should do something about it. But all I should actually be doing is just, not looking at it and looking at something else.
Yeah, fair.
So that it's not in my peripheral, it's not in my view. Just eliminate the potential for me to want to micromanage the trade. So as it stands right now, obviously I can't just like go away from it this way. So we can look at a different pair. Let's look at a different pair, and then we'll see what happens there.
Yeah, I rate that. Yeah, nice. I'm just gonna log into my, like, it's been enough time after Christmas now. I'm certainly not trading the Monday after Christmas. I will trade the Tuesday. So I'm just looking at logging into my account now, because I've got my 100k account logged in ready. I haven't got my 10k account logged in ready though, and I'm not trading my 10k account now. So just logging into my 10k. The only issue is I haven't got. There we go. I'm logged in. The only issue is I haven't got my template, which I need to. It's on my old computer, or not my old. It's on my PC, not my laptop. So I need to transfer that over at some point. So Thursday's my last day before my laptop and all my streaming stuff goes in my suitcase. So I'm just making like a small list of like to-dos, like things that I need to do to fully be comfortable trading abroad once I've moved. So I'm just finding niggly bits now. So that's my 10k account, my 100k account logged in. I just need to transfer over my terminal, like my template. So I'll need to do that though over the next day, because again I've shut my whole PC system down. So I'm gonna have to reboot and restart it. Is that
Are
good?
you getting excited for it, mate?
Am I?
Getting excited?
Bro, I'm really excited, man. I'm really excited. I'm a bit nervous, like, of course. You know, I'm moving into a complete different country where they speak a complete different language. So yeah, I'm nervous. I've already looked at kickboxing gyms. I've already looked at weight gyms, just to keep myself occupied and give myself something to do, give myself a routine. I don't want to be caught up in a foreign country and like lose my routine, because then I lose myself. And if I lose myself, it's going to be a whole messy downward spiral for my trading. So first thing I'm going to do as soon as I get out there, join a gym, join a boxing gym, and then get myself back into like my UK routine. Because once I'm in my UK routine, my trading it'll flow nicely. What I don't want to do is get out there, it just fries my brain. I feel completely lost, and then my trading will replicate that. So yeah, I'm excited because it's like, oh my god, yeah, it's happening. It's just around the corner. A week, in fact, what's the time now? A week today, I'll be in the airport. So
Nice.
a week right now. 7 days from this second, I'll be getting ready to jump on the plane.
And how long is your flight?
About 14 hours.
14 hours, jeez.
Yeah, 12, 14 hours, something like that.
Any layovers?
No, I'm going direct. We looked at a layover. We looked at I think it was like a 6-hour layover. But we can't be asked. We really thought, let's just get there. A layover would be like an 18-hour flight. But we thought, no, screw it. Let's just go directly there. Okay, it's a bit more expensive to go direct, but at least when we get there, and we can just sort ourselves out and move in then.
No, dude, I'm excited on your behalf.
Yeah, same, man. It's gonna be good. It's gonna be a good fun. The more I look at it on Facebook, obviously because she sends me a lot of Cantonese stuff now. She sends me a lot of Hong Kong stuff. So my For You page algorithm on Facebook has started to be a little bit more Hong Kong based and a little bit more Cantonese based. And I was scrolling through last night just before bed, and I was looking at Hong Kong. Dude, it looks so similar to where I live now. It's unbelievable. So a lot of people will say oh, the UK, it's crap weather, is this, is that, is this, is that. Where I live in Pembrokeshire, in Wales, it's stunning. You've got the coastline, you've got hills, you've got mountains, you've got beaches, you've got everything. The only thing is, yes, you haven't quite got the weather. Whereas Hong Kong, yes, you've got the city, but next to the city, you've also got mountains, you've got hills, you've got fields, you've got beaches, the sea. It's very, very similar as far as nature. Do you remember a couple of months ago, me, you, and LJ, and I think Jonatan as well, we're chatting about where would we move if we had to move country? We were saying would we move to Dubai? Would we move somewhere like that?
Yeah.
Would we move?
Where is the place we want to go if we had that infinite money glitch?
Yeah, exactly. And I was struggling. I was thinking, I really don't know, because I like Dubai, it's a tax haven and all, but it's just too new. There's no culture. What I mean by culture, there's no history, there's no heart, there's no soul. It's just very new, very aesthetic. And then you go and look at other places out in the country of Spain, of France, and stuff like that. There's very cultural, very heart and soul. But it's not very aesthetic. It's not very new and built up. dude, like the more I look at Hong Kong on Facebook, like I said, I haven't landed there yet, but bro, it's got everything. It's a semi-tax haven. It's got city. It's got nature. It's got culture and history. I'm looking at Hong Kong thinking, damn, maybe.
Nice place.
Nice place. Nice place.
Place.
Maybe I've found my destination when I have my infinite money glitch.
Well, now we know. Now all of us will know, like, if Will ever disappears off of the face of the planet, we never hear from him again, he's in Hong
Asia.
Kong. We know exactly where he is. He's in Hong Kong.
Straight Hong Kong.
Dude, shall we have a very quick look at chat, and then after that we have a look at the charts?
Absolutely. Louis coming in this morning. Good day, Richard and Wilhelm.
Hello.
Every time Dirk comes on, I start saying my name in some German accent.
What, Wilhelm?
I'm like, Wilhelm.
Wilhelm.
Wilhelm. This is a fantastic question. Tell you what, Alphonius, I'm gonna star this and I'm gonna come back to it once I've caught up with chat. That's a fantastic question, my man. So do not panic. I've seen your question. We will touch on that in a second. Black Mamba saying vodka water.
You're just saying water, basically.
Well, yeah, bro, that's basically just hydration.
yeah, it's just water.
Stephen, hello, Richard, and Will. What's good, my man? How you doing? Infinity, good morning, Rich and Will. Yo, Infinity, what's good? I'm having a cheeky vodka. It's Christmas. 100%, Louis. 100%. I had a Ferrero Rocher for breakfast this morning. I'll be honest. I had chocolate this morning. Actually, I haven't had breakfast. I'm still doing like my sort of intermittent fasting. But then I just saw some chocolate and I was like, screw it, it's Christmas. So Louis, 100%, man. Go get yourself a vodka, bro. Enjoy it. Oh man. Lucky Will. Which Lucky Will? Why am I lucky again?
You're lucky because you're going to Hong Kong?
Oh, that was 13 minutes ago, was it not? Yeah, this was when Dirk was in. Stephen, why am I lucky? This was before Dirk left, because then we have Stephen saying...
We were talking about your trade that you closed just in break.
Oh, yes, fair. No, I was very lucky. Yeah, bro, I was really lucky. It was very stupid. Yeah, I shouldn't have done that. Like, that's why I said, so New Year's Eve now, like I've shown you, I've got my cigars ready. I've got Winston Churchill. So for any Brits out there, this Winston Churchill's favorite Cuban cigar, and it's the 8-inch, and it's called a Churchill cigar, named after him due to the size of it. So yeah, I'm very excited to smoke that on New Year's Eve.
Also 8 inches tall.
No, I think he's about 10 inches tall. He's a little bit bigger than the cigars. Yeah, so I'm very excited to smoke that on New Year's Eve, but I won't drink too much. I'll probably have a couple of whiskeys with my cigar, but I won't drink. I won't drink because I know that I'm streaming with you guys the day after, and I'll probably be placing trades. I refuse to fall down that trap again. It's not fun, guys. I really cannot stress enough how important it is to be like switched on with your mind. When it comes to trading, please don't ever show up hungover, or if you've had a couple of drinks and you wake up and you're a little bit groggy and you're like, oh, maybe I shouldn't have had that extra glass of wine last night, don't trade or move on to a demo account. Even if you win, it's just not worth the hassle. Richard and Will, take the mic for a deep dive. Make sure that you like and subscribe. 100%. Make sure that you smash that like button, guys. I forget my camera's over there, not there anymore. Make sure that you smash that like button, guys. Make sure that you do subscribe if you are new here. We are going to be taking a deep dive into the markets and any questions, psychology, anything you may want to ask us. We'll be diving straight into that topic. Technofeet saying, hey, I'm new here. What's the name of this terminal?
This one that is on the screen right now, this is TradingView, which is a free-to-use, pretty much, web-based platform. You also get an application for it as well that you can download, and I'm using the application form of it. It just uses less. Yeah, it just uses less RAM, mate.
I've never used the application for on PC or laptop. I always use online. I always use Chrome. I got the application.
Yeah, the thing is, Chrome uses significantly more RAM. then
Yes, fair.
the
Yeah, that's
application.
fair. Dude, maybe I'll download it after this
Only
stream. That's a
reason I'm
good
using
one.
that.
I
And then
didn't know
this is just straight old-fashioned MetaTrader 5. It is the one that we use predominantly with the Fivers. Fivers also has a C-Trader one as well, but
Yeah.
I use MetaTrader, so this is MetaTrader.
Although so many people love C-Trader, I'm still not used to it. I don't like it. I know Jonatan loves it, but bro, I hate C-Trader. Like, give me MetaTrader 5. Like, I pray the Fivers don't get rid of MT because that'd be a very sad day. I know a couple of firms that did.
I'm just used to it. That's the
Yeah,
thing.
I suppose. Yeah, maybe it's that.
Yeah, I started with MetaTrader 4. I'm used to it. So,
bro, I started with MetaTrader 4 on my phone. That was, oh, dude, they were the days, man. £200, £300, £400 Percy account on MetaTrader 4 on your phone. I got a message off someone today, yesterday, a friend of mine that I grew up with, and he was like, "Hey, man, you know, like I'm using MetaTrader 4. I'm looking for a good broker. Can you recommend me a good broker? As I'm gonna lock." It triggered me a little bit as I'm gonna lock in 2026. That just cringed me out. I was like, what do you mean you're gonna lock now? Don't wait 3 days. Lock in now. It's midweek. It's Tuesday. Lock in now before 2026 and get ahead of the game. And that goes for each and every one of you out there. Lock in now. Don't wait for 2026. But dude, when he said MetaTrader 4, and I was like, that was nostalgia. I was like, wow. There's a name I haven't heard in many a time.
my own name.
Yeah.
MetaTrader 4.
MetaTrader 4, man. What an absolute dinosaur terminal. Like, honestly, that's paleontologists are studying MetaTrader 4 at the moment. This historians are writing their dissertation on MetaTrader 4.
Yes, paleontologists found remnants of MetaTrader 4
Yeah, literally.
in Aztec paintings,
Archaeologists dig, MetaTrader 4 remains found in old ancient Egyptian ruins.
Yeah. Kalon asking gold check, expect sells or buys. We'll have for that for you just now, Kalon. Warden,
Mario,
Dwarven.
where are you from? I feel like Mario should be like with the name Mario as well as that handsome old face there. I feel like he should be. I feel like he should be Italian. Mario, it's a Vini.
Warden Dwarven saying, how long did you flourish or perfected your strategy? I think we can get to that one also in a minute.
Yeah, I've starred that as well, so we can come. So all the fantastic, I'm getting like all the hello guys, hey guys, good morning guys, chat out the way. Gonna have a quick catch up and a bit of a conversation. Every very high value question that you guys are asking, I'm starring it, so we will go back because, like Remy said, we're gonna deep dive into some of the topics today. So if you do have any high value questions that you want us to answer, then make sure you go ahead and ask it and we will answer it. Do not panic. We haven't skipped past it. It's starred for us to come back.
Alicio saying, I write random things here just to appear on screen. Well, for that
there
case...
There you go. Well, congratulations. Here you are. You are live on stream.
JK, hello guys. Have a wonderful day. Awesome. Thank you, Alicio.
I love that, man. That made me laugh. Joking. Hello guys. Have a wonderful day. And yourself. Have a great day also. Hong Kong is an amazing place. You will like it there. You'll like it. Yeah, you'll like it there. It feels a bit chaotic sometimes, though. Yeah, no, I've been told that. Yeah, my partner said, she was like, it is very chaotic, but it'll be fun. It'll be an interesting experience.
Yeah. Kalon, shortly gold expectations. Time is gold. A little bit of patience. We'll get to that gold one in a moment. Forget about Dre. Why I can't hold trades for longer. Well, you're going to have to give us a little bit more information than that.
Absolutely. I have starred this, but forget about Dre. Can you, I'm going to star it, but could you, maybe give us a bit more depth on the question? Yeah. And then we will add this to the list of deep dive topics. But fantastic question. I just feel like it needs a little bit of meat.
Licketh. I have one buy position still running from Asia session. What do you guys think? I'm already 450 pips up. Also, give us a bit more context. What is it that you're in? Why did you get in on it? Where is your stop loss? Where is your take profit? Give us a little bit more context, and then we can
give us a bit of meat. Give us a bit of something. Welcome, Will. How was in the Stone Age with the trading view on browser? Bro, I'm not up to date, man. Even my missus will say this to me. She'll say, yeah, she'll be like, Will, how are you 24 and acting like 64? She was like how are you so old at heart? And like all my friends I used to hang out with, you say, Will, you're such a granddad. And like even people I meet nowadays, they're like, Will, you're so old at heart. It's like I get something, I know and I learn about it, but I just sort of once I found something, I hate change. I just stick to it. And TradingView, man, is just one of those things. I downloaded the app on my phone, so I do use the MT app on my phone, but the TradingView app on my phone. But even WhatsApp, I've got WhatsApp on my browser. I don't use WhatsApp as the app on my desktop. It's really weird. I don't know why. So same goes with YouTube. Like I've got the YouTube app on my phone, and I'll still go on Google and search YouTube instead of using the YouTube app. It's so prehistoric, man. I don't know why. But let's have a bit of a catch up with the fantastic in-depth questions now. Alessio saying, what's it like in the Stone Age? It's good. It's good over here. Gold's still at like $400 per ounce. All right, let's go. Let's scroll up a little bit. We've got some fantastic questions over here. Right.
Alphinius was the first one that asked, how do you guys find your edge in the market?
Do you want to go first, or do you want me to go first?
You can go. Take
awesome stuff. So Alphinius saying, how do you guys find your edge in the markets? It's a super simple concept, but it's quite hard to master. Very much like poker. So this guy up here is a fantastic poker player, and he explains it. Poker is easy to play, but very difficult to master, almost impossible to master. Same goes with finding your edge in the market. It's very easy. It's a very simple concept, but it's almost impossible to master it because your edge is always changing. So the minute you find your edge, you won't realize it at first. What you will find is that you seem to be winning a little bit more than you're losing. Or your P&L, depending on your win rate, you can have a negative, like a minus, like a 30, 40, 50% win rate, which is technically under, like you're losing more than you're winning. However, your risk to reward ratio, so therefore your P&L, you're actually up more than you're down. So depending on your strategy, that's how you'll find your edge. Just through back testing, understanding the data, collecting data, trusting your edge, and executing with very minimal psychological input. That's usually how you'll find your edge in the market. So me personally, I realized it was forgetting about psychology and having a complete mechanical strategy. Once I had a complete mechanical strategy based on back testing data, forward testing, and then executing according to my plan. And guys, I can't find them, unfortunately. I don't use them anymore. But I used to have sticky notes. And maybe I can find them. Hang on. I used to have sticky notes. And those sticky notes, I would actually place all over my screen. And those sticky notes would basically be telling me, follow your plan, do this, do that, make sure you don't do this, make sure you don't do that, and etc., etc. And I would literally, I can't find them. I would have to look at them every single day, and every single time I'd place a trade or go to place a trade, I would have step 1, which would start on one side of the screen, step 1, step 2, step 3, step 4, step 5, step 6, step 7, step 8, step 9, execution. So it'd be from step 1 would be opening up the charts. Execution, step 10, for example, would be, hitting a full TP, hitting a full stop loss, or executing and opening the trade, depending, and it would almost be like programming, like an if statement. It would be if trade valid, move here. If yes, move here. If no, move here and start again. And start again and start again until you get that yes, and then you move on to the next section. So that's how I found my edge in trading, was just trust in my process, trust in my back testing and forward testing, understanding my data, executing with minimal psychological input, and then through experience, I was able to start understanding and using my discretion a little bit more.
Awesome.
What about yourself, Rich? How did you know that you had an edge? Like, how did you find it?
So, edge for me was you've already mentioned it, but like I come from a like poker background. So when it comes to risk management, I kind of like feel like I have risk management down well enough that I can, where I don't need to have my hand held when crossing the road. So for that specific example, I feel like I brought information from my background into trading. So risk management was one of them. Another one was the mathematical side, where I could very quickly know exactly how much risk I need to put on at any specific point. How much would that be in dollars? How much would that be in terms of equity? And then on top of that, Will, are you muted? Oh, you're probably on a call. So first and foremost, I brought that into trading from my background. So edge for me was kind of like taking that thing that I already had experience in and kind of like developing it to the point where it was more in line with my current usage, in this case, which was trading. And then on top of that, I created systems for myself that I used to kind of like curb certain things. So if I overtraded, I tried to curb that overtrading. If I was revenge trading, I would put stuff in place to kind of like curb that as well. So edge, I think for everybody is slightly different. But for me, edge was that mathematical and psychological aspects that I brought to trading. And then only after I had those things that I kind of like find my strategy that aligned with my risk parameters as well as my psychological requirements. So that was edge for me, and that's how I found mine. So I kind of like had this broad idea of what it was, and then I kind of refined it with trading and like focused it on trading. Let's rather say. So for everybody out there, edge to you might be slightly different to everybody else. Will's edge was the sequences that he followed with his sticky notes, and knowing that if he's going to follow a process, he's going to follow the process exactly step 1 to step 10. Where for myself, I'm also a process-driven person, but I'm a little bit more mathematical. I'm a little bit more risk controlled, let's rather say. So everything for me had to align. So the risk along with the expectation, everything had to align, and then I built it from there.
Yeah, nice. We've got Warden Warren saying, how long did you flourish or perfected your strategy? So how long did it take? So I suppose this would be almost like an add-on. So I'm going to slightly tailor your question, if you don't mind, Warden. And I'm going to say, how long did it take you after understanding your strategy and understanding your edge to become profitable?
Profitability, I feel like, is definitely something more in line with what it is right now. I don't think that it's perfected. And I don't think that I don't believe in the idea of perfection. I believe in the process, the striving for perfection, knowing that you'll never reach it. So the idea is that I know that my strategy is profitable, and I know that my strategy works, and that's all I want it to be. I just want it to be profitable, and I want it to work more often than it doesn't. So you can almost say that my strategy is perfect at this point, in the sense that I'm probably not going to be tinkering with it too much going into 2026. because I've kind of like tailor-made the strategy to fit my personality and everything that I want out of trading. This is what this strategy is going to give to me. How long is it going to last? I don't know. Am I going to have to adjust it at some point? Probably. But for the time being, I feel like it is where it needs to be. Now, as to how long did it take? It took the best part of the whole of 2025. Pretty much.
I read that. Because I remember you were sorting your risk out and adjusting your risk in the first sort of 2 quarters, like the first half of 2025, and then I don't know. I'm not going to say you've mastered it because I don't want to trigger you, and I don't want to dampen down the quality of work that you're currently doing. But I felt like you mastered your risk pretty well in the first half of 2025. So I remember that was just before you joined me on stream, and your risk was inspiring even to myself. But I'm not going to say you mastered it because I know the work that you're putting in even now, and it's inspiring to see. No matter who you are, whether you're the most profitable trader in the world or a complete new beginner, Rich with his risk strategy, the best of 3 is me. It was absolutely revolutionary in the eyes of risk management for those who are struggling with it.
Thanks, man. I appreciate it. But like I said, don't think mastery is something that people should strive for. I think just the word itself to me just holds no place.
No, exactly, and that's why I sort of I tiptoed around the word mastered, because I want to emphasize how amazing the best of 3 of me risk strategy was, without making it sound like you've mastered it. Because and you touched on it perfectly with strategy when you said you've never perfected a strategy, but however, if you were to label it, it would technically be perfect now due to the fact that you have no intention of changing it. However, perfection doesn't exist because perfection only exists while you think that it works. Once strategy doesn't work, it's no longer perfect, and therefore you've got to niggle and change and edit ever so slightly to optimize even more. And I think as traders, we've got to all continue to look for ways to optimize. However, I think we got to be careful optimizing. You can't don't over optimize. Don't optimize something that works. However, something that clearly not necessarily isn't working, but could obviously be better, then look at ways to optimize it. Like if you're only gaining, I don't know, 1 hour, like one risk reward, 1 hour per trade, and then you're seeing there's an obvious 2-hour trade, like 90% of the time, or more times than not, you could be getting a 2-hour instead of a 1 hour. There's an optimization level there. So therefore you can back test it, forward test it, and then start understanding that, okay, now I can move into a 2-hour trade. And therefore you can improve and optimize your strategy. However, if you're looking at 1, 2, 3 hour reward per month, like that's the percentage gain that you're making, and you're like, I'm just not happy with this, you want more, you got to understand that there is a very fine line, like a hairline between optimization and greed. And I think that's where a lot of traders go wrong.
Yeah, I think you nailed it by saying that it's complete rather than perfect. Complete for now. Up until it's no longer complete and it needs to, be
exactly
tested and adjusted and whatnot. But for now, let's say about a year. It took me about a year just to shorten the question. And yourself, Will, what was your time frame?
Dude, I feel like I'm actually behind you with my strategy. I feel like I'm still tweaking and optimizing. I don't think mine is complete yet. So I started with this strategy beginning of 24, maybe late 23, beginning of 24. And then that's when I started gaining profitability. That's when I found my edge. I changed it end of 24 going into 25, and then I've changed it again towards the end of 25, going into 26. So I'm still trying to find my most optimal, but I think I found it. I think I got like a little bit more tweaking to go, and then I think I'm happy with my strategy. I think I'm happy with it. There's still a little bit of if buts and maybes that I'm tweaking and playing around with ever so slightly.
Awesome.
So therefore, it's still semi ongoing. I feel like I'm like 80-90% there with my strategy. But I'd say 20. Let's forget 23. Let's go 24, 25. About 2 years. Yeah, about 2 years, and I've changed it twice within those 2 years.
Oh, okay. So you had a strategy. You kind of like, did you cut away like more than half of what that strategy was, and then
No, probably like 20%. I don't even think I got rid of 20%. I changed an asset, and I added. So I changed an asset and then added in fibs. I was trading just cable, just GU, and then I moved over to GU EU, and then added in a fib. But now I haven't dropped GU EU, but I've like moved it to like a subcategory, like a sub pair, and now I'm trading XAU without the fibs, but with the consolidation as well. So I've now added consolidation on top of my fibs and a little bit of trend and volume. So, and plus I've added back in XAU USD, so gold. So they're just
looking a little bit at fibs now more often, but I still don't use it in my trading. It's just
I think it's just like adding confluences. I think that's what I'm doing at the moment. I'm adding confluences like probably at least twice, like once, twice a year. I'm adding in a confluence, but then what I'm also doing at the same time is I'm trying to find my least optimal confluence, because I don't want like 1,001 confluences and 1,001 like drawings on the chart, because then I may as well have like a million indicators. That's equal. Drawing that many confluences on a screen is just as harmful as having 1,000 indicators. So what I'm doing is the more I'm adding in like really optimized confluences, my really low sort of flagging least optimal confluences, I'm sort of like just putting them away into the filing cabinet for another day.
All right. Shall we have a quick little gander at gold?
Absolutely.
So we can both give our inputs. I've already got gold up here. I've marked up a few areas for myself. So if I just start on the 4 hourly, you remember yesterday I said I don't think we're going to go lower than 4,300. We basically reached 4,302-ish, and then from there on we started to push up ever so slightly. But we still have this area of consolidation down here. We have this slight little area of consolidation over here, just above where we were basically. We just wicked underneath this area of consolidation and started pushing away from it. So as it stands right now, we are showing an attempt to try and break this downward push that we had from yesterday. So just on the 4 hourly chart, this was the high, this was the all-time high, which was created on Monday. Yesterday, we've had a nice bearish day. It pushed very, very strongly lower. And now this is the very first attempt for the bulls to try and break this downward trend, this downward push that we've had here. If we go over to the hourly, you'll see it as well. This was yesterday. A little bit of consolidation, not yesterday, the day before, Monday, a little bit of consolidation going into the highs, or the all-time highs, so very slowed upward momentum, and then strong downward pushes coming into yesterday in the morning hours. An attempt to break this potential downward push failed, and then the downward push initiated and started pushing lower. So first and foremost, we have a base area over here on the 1 hour chart where we had a bit of indecision, a little bit of slowed movement. This was at the beginning of the London session. So you can kind of like see this section here is in line with the previous area where price struggled to try and break through. So if we just take this low section over there and just pull it all the way through, you can basically see it's very close to where this area was. We were just jumping on top of it and then pushed into it, tried to push back out, and then volumetrically pushed through. So that to me means that this base area over here is a strong area of interest. It means that if price were to come back to it, we should kind of like wait and see what the reaction is from this point. It can either break through it, trying to look for the all-time highs, or at least this area over here where price previously struggled to or tried to at least break this initiated downward push. So first and foremost, no, I'll just turn this into a base. So first area over here on the hourly, if it breaks through this, it can potentially come and test here. If it doesn't break through this, then we will most likely continue lower to try and test again round about this 4,300 flat point on gold. The way that it looks right now is it does look like there is a potential for us to come and test this area initially, at least. If we go down to the 15-minute, still no real structure in this area over here to really test for. This is all just bearish downward position. It's just pushing lower and lower and lower from this point over here. On the 15-minute, no real resistance from the bulls to try and push it up higher. If we go towards the left, there's obviously a lot of structure over here, areas of consolidation, areas where price rallied, small little areas, small bases where price attempted to break this upward rally, but nothing really significant. So we have to go all the way down to the 5-minute to find an actual base area within this drop. So very, very significant attempts to try and push higher, but failed, and then volumetric fall, volumetric push lower. We have a base area right over here, another drop, so a drop, a base, and then another drop, and then another base, which is where we are right now. So as of right now, we're in this base area over here. I didn't mark it because we'd already reached it. So we'll see how we react over here, but we're pushing into it quite strongly. So I think that it might get disrespected. So if I do mark it from the bottom to the top, I think we may disrespect this one and push into this base area right now. That is now assuming that we're going to continue with this higher. If this is the baseline low over here, this is the baseline low and baseline high. We've had these small little micro attempts to push higher. If we go on the larger movement itself, this would pretty much be the high, and then this would be the low again. So initiated low, so this is a higher low, this is a higher high in relation to this one over here, and then from there on we're just trying to push price higher. So right now we are in a low time or lower time frame bullish upward price action, and I think there is a potential for us to come and test this 15-minute base, and if this one fails, then we will go and reach up here for the 1 hourly base. So the 15-minute bases numbers are 4,411 to 4,422. That's on the 15-minute base, and on the hourly base we have 4,446 going into 4,464. Now, if this fails and we start pushing lower, then we're going to definitely come and test 4,307 going down to 4,271. That is what I think potentially we can have.
Very nice. Very nice. I was just watching chat while you were drawing that up. However, I do apologize. I didn't listen to it because this will be interesting, actually. I didn't actually listen to your breakdown because I was currently placing a trade on gold. So that's going to be super fun.
Wait, what are you doing? What are you doing? Are you buying?
Guess. Let me. Right, I'll tell you what. I've not shown you. Like I said, I've just placed this trade. Go draw up my trade.
Don't you worry. Okay, so 15 or 5. Let's have a look at the 15. All right. We have a very clear rally, base rally. That's on the 15-minute. So if I had to wager a guess, somewhere over there. Okay, I don't have with the low down over there and the high up over there. That's my initial thoughts. Go down to the 5. You have this small little area of consolidation over here. You obviously have this low area over here from there. So there, potential. You have this upward push. You have the high over here. Okay, so your entry, if it was on this 5-minute candle, I'm going to assume it was on the closure of this nice strong bullish candle. You have a secondary entry somewhere over here as well, I think. So I'm thinking you're going 0.5%, not 0.5%, but half of your initiated entry is going to be over here, and the other one was on this. You're aiming for this area of consolidation up over here, most probably. So I am saying your first entry point is on... Wait, let me move this one out of the way. Your first entry point is at 4,396. Your take profit is at 4,446. Your stop loss is at just slightly below 4,350-ish. That's your initial one, and then your secondary one is most probably going to be on this one. Your entry will be on 4,384. Your stop loss will be at the same place as the other one, 4,348-ish, and then your take profit will also be at 4,446.
Nice. You were pretty much back. Right. I haven't actually done my break and retest. I've just gone on with a breakout trade. However,
this is the break.
Yeah,
but you
so
broke from this.
Yeah, that first. So there we go. Let me just
bring up yours.
Yeah, let me bring up
Let's
my.
See how close I got it.
You close. Bro, you were bang on. You weren't close. You were on the money. Also, guys, we were chatting about using free software. Guys, you don't have to pay for TradingView. It's free. Look, I'm a profitable trader. I've been a profitable trader for the past 4, 5, 6, 7 years. I've been in the markets for. So like 4 years, I think it was, for like full time, 3, 4 years, something like that. I really can't remember. But I don't have a premium subscription on TradingView. I don't see the point in it. I can trade profitably without it. I don't use indicators. So, I use my MT terminal as well. You don't need to spend unnecessary money on trading. So yeah, this is my entry on this candle here, on the close of this, and stop loss on the low of this move here. And TP is indeed, go back onto the 15, on this leg here. Bro, you are
the stop loss. I took your more discretionary, your longer, should it.
So let me now bring my terminal up, because my terminal, so if we hold there just a second, let me get my...
You're still on the laptop, right? So this might take some time.
Hang on. There you go. Can you see this okay?
Yes.
Fantastic. Yeah, so my terminal, you got bang on. Price, 3696. Stop loss, 4350. TP, 4446.
Oh, mate.
You were bang on to the exact price. That was insane to see.
Yeah, and that, you see, that's the thing of trading with you and being on stream with you and seeing a lot of your trades is I don't take the same trades as you do, but I understand your trading style. So I kind of like know, I would say instinctively where I would like say, oh, I think Will would like this entry. That kind of like thing.
Yeah, dude, that was insane, man. That was so good.
I
am actually going to be looking at a break and retest as well, though. So this is my discretionary stop down here. Sorry, my hard stop is down here, risking about $450. That's not going to happen, obviously. I'll probably be risking about $150 as a discretionary stop loss. But yeah, as a discretionary stop loss. But this is my hard stop down here.
Dude, I'm chuffed with that. I got it bang on.
Bro, you got it mega bang on. That was insane. So I am going to be looking at, however, an area down here to be buying at. That'd be my break and retest. But we'll see. This is just my 10k account, by the way, guys. This isn't the account this isn't my live funded account. I mean, it's a funded account. It's in phase 1, but it's a 10k account. So it's not
right. Let's have a quick little gander at chat quickly. Sorry, I need to go up a little bit.
Oh, in fact, there was actually some fantastic questions by chat as well. So what we'll do, I think I've starred them. So we'll have a quick look. Try and find the most recent ones. Here we got Desmond saying, do you guys see the head and shoulders pattern on gold break and retest?
I don't see the head and shoulders. I don't look for that.
Me personally, I don't see, not on gold. I like to see something similar to the head and shoulders on EU and GU, but I don't like it on gold. Gold is very basic. Consolidation, break, retest, trend continuation, trend following. It's as simple as that.
And it also depends on like what time frame are you looking at.
Of course. Yeah, of course.
I don't really look for trade entries higher than the 15. I kind of like just want to see how strong a candle is on that on the higher time frames. As an example, if there's maybe a potential turnaround point, but I don't generally look for head and shoulders for entry points.
Yeah.
So no, I don't see it. I don't see it.
Yeah, exactly that, man. Guys, if there's some fantastic questions here. Like, you guys are really chatting away, and it's amazing to see. So thank you so much, guys, for the participation and the fantastic questions. The one thing I will ask is that you please smash that like button. Let's see if we can get 150 likes now in the next half an hour. That would be really cool. Good morning, both. Good morning, Anapasi. How are you doing? What's both of your thoughts on indices going into 2026? This man here, I know for a fact, will be trading the indices.
Yes, I have pretty much reduced the assets that I look at down to a singular one. Oh, I just noticed now that I see Dirk's faces on my face.
Huh?
I see Dirk's. I don't know if you can see it on the YouTube, but Dirk's face is on mine. Seems like Dirk is connected but unconnected, which is weird. I don't know if you can see it on the YouTube or not.
I can't see it on the stream either.
Well, I can see it on. But okay, so long as people can see me.
Oh no, that's not true. I can see it on the. That's really weird. I can't see it on the stream platform, but I can see it on the YouTube. Dirk is above
can see
you.
it on the stream platform, but I'm not seeing it. Let me have on the YouTube.
How strange. But yeah, go back to the indices. I will be trading the indices in New York session. I won't be trading the indices outside of New York. I don't trade I don't trade European indices. I don't trade the DAX. I don't trade UK 100. I don't trade any of that. The FTSE, nothing. However, I do trade the NASDAQ and I do trade US 30. And I also do trade S&P. So I don't know if you can see down here, I got US 30, NASDAQ, and S&P. I do trade those, but I trade them in New York session, not in the London session. So yes, that is what I will be trading in 2026, will be New York session indices.
So sorry, let me then also just say, I will definitely be looking at NAS or US Tech. I will definitely be looking at that. That is my current predominant asset. I've had a very, very good December on the NAS. So I'm hoping that I can replicate the same level of success going into 2026 with NAS specifically. And then I'm also currently looking at potentially adding something like either the DAX or the US 30 but I'm not yet set on which one. I'm still doing a little bit of backtest on DAX, just so that I have something to potentially look at should the US stocks, or the tech stocks itself, not be doing all that well, or is a little bit sideways. So just looking for a different indices, just to kind of like look at. So yeah, I think I'm moving over from gold and Forex to maybe just indices. I think indices.
Nice, interesting.
Yeah, they've really been treating me quite well recently. So
Yeah, I still prefer I don't know. I do like my assets like the indices, but I don't think I could make it my predominant one yet. I still like gold. I still like GU and EU. Although GU and EU I haven't been trading much at the moment.
I don't think I've taken a GU trade in the last 2 weeks, or even an EU trade.
Really?
It must have. Yeah. Let's have a look here at the history on this one.
Can't say I blame you, mind.
Yeah, the last GU trade that I took was on the 15th. So 2 weeks ago was the last GU trade that I took. And it was on the stream account. 15th of the 12th, 2025. GU, that was a buy. It was a small win. So yeah, I have not taken a GU trade since. And then the same thing is on my personal accounts as well as my other prop accounts. I have not traded any GU whatsoever.
Yeah, fair. Yeah, fair, man. Hey, that NAS is looking like it wants to come back down slowly, but
I'm hoping that this slowdown that we saw over here, this slowed momentum, is a sign of us wanting to attempt to come back down again, because it's basically taken all of that floating P&L that I had, turned it into a break even, turned it into a slightly running in drawdown, and this does look nice, but I would like to see the follow through.
Yeah, that candle on the left would worry me a little bit. That's
this
the only
one
thing.
is not a nice candle. That's why I drew this little face. If it goes this direction, it's going to be sadness. If it goes this direction, I don't know. Maybe
you're confused. You don't know what's going to happen.
I mean, it can be either or. But if I don't want it to go this way, but if it does, then it's okay. This did start out as a 0.5%, drawdown, not drawdown, like stop loss risk, and is now on 0.25. So if I do lose this one, that's fine. I've already got this one over here, so I'll still be up 0.25% for the day.
Yeah, nice.
Which is good.
Kambam69 saying, Will, did you get a new camera or just become more handsome? Or is it the vodka just getting stronger? Probably the latter, mate. Probably the latter.
100%.
Definitely the vodka, mate. Yeah, you got your beer goggles on. No, I have got a new camera. Ish a new camera. It's not a new camera, but I've just started using it for stream. This was my old camera, and it was crap. It really wasn't that good. But I've been using this for a couple of weeks now, and I certainly haven't got more handsome. I need a haircut.
So let's get to this question about forget about Dre. So it's a multi-parter. So he started with, I hesitate to hold trades for longer. I know market is going perfectly according to my strategy, but when I get a little bit of profit, I close the trade. This is really bothering me. I am using a 20 EMA with 100 plus order blocks. Jeez, okay. My stop loss is perfect, but I can't hold it for longer. I get anxiety, and I think that is the biggest flash card for me, is the fact that you get anxiety. Currently, the strategy is giving me a 70% win rate. Any advice of how to fix this? So, anxiety. Anxiety is something that I think a lot of people suffer from. And the thing is, anxiety has many different trigger points. So today, strangely enough, for the first time in probably months, I had I wouldn't call it a panic attack, but like a little bit of like an anxious moment during the day. jittering a little bit and felt this pit, this weird feeling in my chest. And that's usually where I get my anxiety, is like right here around about the sternum, just feeling this strange pressure. And that was today. For no reason. I have no idea why. I wasn't in a trade. I was, in actual fact, I was busy playing a game. I was playing GTA. And I wasn't like in particularly like in a strange area or anything like that. I wasn't doing a mission or anything. So like nothing that stands out as, hey, listen, there's this trigger. Now I know
you need to walk away because there's a cause here.
Yeah. I know my triggers reasonably well. Yes, there may be one or two triggers that, I just haven't figured out yet. But in general, I know what my triggers are for my anxiety if I do have an anxious moment. And I've come to realize that sometimes if I feel anxious, I need to ask myself one of two questions. Is this really anxiety or am I hungry? So I got up, didn't know what the trigger was at that point, went to go and get myself something to eat, took a nice big glass of water. Well, this was full, and I think I halved it afterwards. I went outside, touched a bit of grass, just did a bit of breathing, came back and realized, okay, whatever it was, it's gone. So I think first and foremost, realize, where is this anxiety coming from? What is the trigger point for your anxiety? If you feel anxious about something, take a step back from the thing that you're getting anxiety from and look at it holistically. Look at where you are. What are you feeling? Are you hungry? Like, I know the hunger thing might seem weird, but like anxiety for a lot of people is in the stomach. Like you feel it like a pit in your stomach, or you feel like a feeling of like unease, it's a little bit unsettled. Just kind of like figure out first, are you hungry? Is your sugar dropping? Is your body giving you signals that, listen, you're not taking care of yourself. You need to drink water. You need to eat something. First and foremost, figure that out. Secondly, like I said, when you've stepped back, kind of like take a few minutes just to breathe. Will likes to talk about the breathing, and he's also helped me also a fair few times where I'm feeling a little bit worked up, where he's like, dude, take a few breaths, deep breath, hold it in, breathe in a little bit more, breathe out. Try and find yourself a breathing exercise of some sort that really helps to calm you down. Because the problem with anxiety, especially when you are trading, is you're taking a logical action, which is the trading, which you took the trade based on logical things. I had a setup. I'm looking at a rules-based strategy as an example. You go in on your trade, there you are. But then anxiety takes over, and that is an emotional response, or at least it's a emotional reaction to something that you're experiencing, or it's just a good old-fashioned, fight or flight of your body. So you're uncomfortable, and your body is telling you do something about it, and then it makes you feel uncomfortable. So you get up, you move around. So figure out which one it is and why. And then once you figure out your why, you can then come and look at the chart and say, okay, I'm feeling anxiety when I'm entering a trade because, and then there's the reason. And then you can work on that reason. You can try and break it apart. You can try and find actionable steps that you can put into place to help you with the anxiety. Because here's the thing. You're talking about you've got a 70% win rate. So you've got stats. That's the first thing that you've got. You've got stats. How much of that stats you have, I don't know. But let's say hypothetically you've done your due diligence and you've got at least 100 trades and 70 of them exactly follows your plan and exactly played out as it should. That's a good thing. The first thing that I would ask is, that 70% win rate, what is it based on? Is it based on you not micromanaging your trades? Meaning you enter, you set your stop loss, you set your take profit, and you forget about your trade. So if we're just looking at purely from the idea that you don't hold your trades to fruition, you either let it run to stop loss, or when it goes into profit, you're kind of like closing it early. Realize this, that 70% win rate will only come to fruition if you leave your trade to either hit stop loss or to hit take profit. Your win rate means nothing if you keep closing trades early or leaving them to run to stop loss, because then your expectancy is skewed. You can have a 70% win rate and still lose your trade because your wins are 0.1%, but your losses are 1%. You get what I'm saying? So go and look at why is it that, or what is your 70% win rate based on? Is it based on discretion? Then you need to ask yourself different questions. Is my discretion maybe a bit flawed? Am I seeing things that are actually not happening? Maybe I need to go to a higher time frame and not have so much noise. Maybe I need to enter a trade and kind of like just step away, close the charts, and go about my business. If, let's say, hypothetically, one of your trades is, or in general, your trades are half an hour. Stupid example. 30 minutes is normally the time for you from when you enter your trade until it reaches either stop loss or take profit. Enter your trade, put your stop loss, your take profit, walk away for 30 minutes. Come back after 30 minutes and then see where you are. And then you can maybe then decide what you need to do based on discretion. That's the advice that I would give. Anxiety, go and find your why when it comes to anxiety, and then you can start building on that. Do you need to micromanage your trades? Do you need to be in front of your the terminal when you have got a trade open? Are you looking for specific points and then moving your stop loss and so on and so forth? So go and look at those things and kind of like find the level that you're finding yourself reacting to the market more than you letting the market play out.
Yeah, absolutely. Like, I'll be honest. Me and my brother were one of these guys that thought mental health was absolute bullhickey. Like we'd look at it and think, it's a pile of rubbish. No such thing as mental health. You're all just wimps. And it's because we had zero stress. We had zero to worry about. We had nothing on our minds. We weren't kids, but we were teenagers. Our biggest stress was showing up to work or doing an exam in school or, going to the pub on a weekend. That was our biggest outing. We had nothing to really worry about. Not until we started becoming entrepreneurs. The minute we became entrepreneurs, the minute we started competing with people twice our age at a young age ourselves, the minute we started putting so much pressure on ourselves to overachieve and earn and become something that we wanted to become generational at, that's when we started developing anxiety. That's when we started understanding that there's a lot of self-propelled pressure. And we started realizing that everything when it comes to anxiety is in the head. It's all mental, hence mental health, and we started thinking to ourselves like, wow, this, mental health is a real thing, but it can be not stopped, not solved, but controlled. And like you said, like identify whether, like, what sort of anxiety you have, whether it's a stomach one, whether it's a chest one, whether it's a breathing one. Understand what your triggers are, which Rich has just touched on now. But for me, I get anxiety. And why do I get anxiety? I don't know, but I do. I think it's due to the fact that I put so much pressure on myself to overachieve, even though I'm only 24, competing against 50, 60-year-olds, 40-year-olds, people who've been in the game for longer than I've been alive. So I'm trying to put so much pressure on myself to overachieve. But then why am I surprised that I got anxiety? Why am I surprised that I'm nervous? Why am I surprised that I put so much pressure on myself? Okay, well, if that's the case, you need to learn how to control it and channel it. Otherwise, it will control you. So the biggest thing is when you've got anxiety in trades, ask yourself why. Are you overexposed? Are you just nervous of the outcome? It's okay to be nervous of the outcome. Like, for example, a race car driver, an F1 driver, you're not going to see Max Verstappen go into a race and think, this is mine. I've got this. It's easy. It's in the bag. No, he's going to feel nervous because you know that he's going to do about 200 mile an hour into a corner, 150 mile an hour through a corner. That's going to make anyone nervous. So therefore, it's okay to be nervous in your industry, in your discipline. If you're nervous in a trade, that's fine. It means you care about your trade. If you're not, like I think my partner went through an interview a couple of days ago, and she said, well, I'm a bit nervous for this interview. I haven't done an interview in a while, So I said, good. You should be nervous because it means you care. Channel it. Don't let it control you, because if you're not nervous, it means you don't care. Now, therefore, if you are nervous, that's okay. It's understanding how to control it. Ask yourself why. What is it that's making you nervous? and then how can you control it? How can you channel it? My biggest thing is get up, walk, go touch some grass, get some fresh air, and do these 3 things. Deep breath, hold it for a second, and slowly breathe out. And what I mean by that is breathe in through the nose, like really fill your lungs, hold it for 1 to 2 seconds, and then slowly breathe out through your mouth until you've emptied your lungs. Do that 3 times. I can promise you it will make you feel significantly better. But don't do that while you're looking at one of your triggers. Go out and touch some grass and do it. And then ask yourself why. Then address the anxiety. Then address what could be triggering you. Then hard reset, you're back in the game. It can be literally that simple as breathing exercises.
Yeah, I love your breathing exercise routine. Bring it into your day-to-day. If you're feeling stressed, if you're feeling anger, whatever, just take that moment, just breathe. Because when it comes to emotional reactions are very difficult for you to think logically through in the moment. So
yeah, absolutely.
You don't know if you're having an emotional reaction now or if you're having a logical reaction. And if you don't know the difference, then you need to just kind of like breathe a little bit, sit back, and then realize, you know what, I think I'm overreacting. Or you know what, I think I need to step away because I'm about to make a decision that is going to probably not be the best for me. So just take a moment, step back, look at it holistically, remove yourself. Like, if you're a person in the ocean and you're busy drowning, what's the first thing that you do? You grab out for whomever is there to help you, to the point where even the people going to rescue you, you will try and drown them because you're trying to save yourself. That's the same idea. You can't save yourself within that moment by reacting based on the moment. You need to step out and say, you know what, look in on this, get a clear view of what it is that's going on, and then from there on, look at putting in actionable steps. Should you understand what it is that you're going through?
Yeah, dude, absolutely. Yeah, 100%. Let's carry on with chat because you guys are reeling the questions out, so we don't want to get too involved in just one question. We will catch up.
It is a very big question, though, but it's like...
That was a fantastic question, and thank you for diving a little bit more in depth with it. Alessio's saying he is using sticky notes in 2026. That proved all you were saying about being old to be true. 100%, man. I still use flash notes. I still use, like flashcards. I'm prehistoric. In fact, I'm actually, my partner knows how much I use books. Like, they're all just notebooks. So for Christmas, she actually got me a tailored notebook. Has my name on it and all.
My wife got one as well.
So she knows how much I use notebooks. So that just goes, it says all it needs to say about how old I am, or how old I am at heart. It's Vinny. What's up, Rich? Well, Merry Christmas and a Happy New Year in advance. You're trading this week. Yo, what's good, Vinny? I'm currently in this gold buy. I'm in this gold buy at the moment. Let me open my terminal. I'm currently up $60. So yeah, I am indeed trading this. I'm not trading it on my live account. I'm trading it on my account that it's like my fun account. Not my fun account, but my account that, look, if it blows, it blows. I'm going to take high value setups, but I don't think that the trades are going to be overly valid with the volume and the lack in volatility coming into the markets over Christmas.
By the way, this is the last week that you guys can get the 2.5K high stakes account for $12.
Oh yeah, it is indeed.
That ends on Friday. So last few days for you to get. I wanted to mention it yesterday. I forgot to mention it yesterday. Don't forget to go and get yourself one. You can still scale it all the way up to 500,000 on that account. So go and get yourself one for $12. It's cheap.
Indeed, mate, indeed. Forget about stress. Scott Watterson. Stress is a voice in your head. Dude, 100% is. It really, really is. But it's easier said than done. stress is a voice in your head. Stress it. So I can't remember the exact saying, but you know the whole sort of yesterday's history, the future's a mystery, today's a present. That's why they call it the gift. You know, there's an extra saying on that, basically explaining how reality is pure a figment of your own imagination and of your own perception of what you see and what you experience in the world. So my world, like, think about it, like, I don't know if anyone played Minecraft as kids or even now, you know, like if anyone's ever played Minecraft at all, you have a world. Now, my world could be completely different to Richard Butler's world. Richard Butler's world could be completely different to Scott Waterson's world. Now, the reason that is because we've got different life expectancy, different life experiences, not expectancies, different life experiences. Now,
Different life expectancies as well.
I mean, yeah, I suppose. I don't know how old Scott is, but
I think Scott went to go and cut a tree or something. Yeah, he did.
I was going to cut.
I don't think Scott's
Well,
with us anymore.
make sure that you're safe cutting down that tree, Scott. Otherwise, you'll have a less of a life expectancy than me and Rich.
Like this.
Yeah,
Like,
if you're coming back, hey guys.
like, hello guys, my name's Scott. Scott, only 4 fingers left.
Don't use a chainsaw, guys. Yeah, so like I was saying, you know, yes, it is in the head, but at the same time, stress can't. Sometimes, you know, when we look at a situation and we can't control it, it stresses us out because we don't know what to expect. We're in uncharted waters. We don't know how to react. We don't know how to act. We can't control the future of something. You know, so trying to accept that it's just going to happen and we've got to ride that wave can be very difficult for some people.
Stress is very much metaphysical. It starts out in the brain, starts out as a thought, as a feeling, and then it kind of like becomes physical. You can have physical reactions to stress as well. So,
In this comment.
yeah, best of luck tree cutting at my mom's garden, trying to get done before New York's open.
Nice.
Good luck with that, mate. Don't.
Speaking of, I'm sorry, mate. Speaking of New York Open, we have got news out today.
Yes, we do.
We've got the FOMC minutes, but that's at 7 p.m. No,
Yes,
we've got nothing in between.
It's a bit later today.
Yeah, we've got nothing in between, have we?
No, there's nothing in between.
So
You should know this, mate. We have a very, very awesome news bot telling us when and where
we
where
do.
something's coming
We
out.
do indeed, and it will let you know 10 minutes before.
Well, we have it.
Yes, yeah, we have it. Dude, look at gold, man. What's it doing? I can't
Gold
decide.
is doing what it wants to do, mate. Like, be patient.
I can't decide whether it wants to go up or down right now.
It's in its area right now. You have your stop loss all the way down there. I think it's in a good place. I think you can just kind of like leave it.
Yeah. Oh no, I'm going to, man. I'm actually probably going to leave this for the foreseeable right now. For the until we see something invalidate it, I'm probably just going to hold this because it looks really nice.
In other news, my NAS is ever so slightly in profit. So it's just kind of like
Nice.
sitting there.
I was going to say, is it just hanging around now?
Yeah, it's just kind of like pushed. This was the entry point, pushed a little bit lower, went back into drawdown. Didn't really break higher than this initial area that I marked out. If I go on to the 15-minute, it might make a little bit more sense. It just didn't look like it wanted to really do much there. But it's kind of like just sitting here now. It did try and push lower. The only issue that I have here is the fact that if this is the lower, then this is a higher lower. And if this is a high, this is a lower high. So we're kind of like going through this motion, which then means that we'll either have a break lower or we're going to have a break higher. That seems like the most nothing burger sentence. It's either going to go up or it's going to go down. Yeah, that's what.
Yeah, well done, Rich.
Congratulations.
Congratulations, you just stated the absolute obvious.
Yes. Captain Obvious over here.
Yeah, speaking of Captain Obvious and speaking the absolute obvious, we've got over 200 people watching right now and only 100 likes. Let's smash that. I want each and every single one of you amazing people watching, to smash that like button and bring us up to a minimum of 150 likes. We have got 7 minutes left of our deep dive section on this stream. Make sure you smash that like button and absolutely hit that share button as well, and subscribe if you're new here. 210 people watching right this second. We want at least 150 likes and some more subscribers.
Judzer is saying, wait until the hour, it will break upwards. Okay. So 6 minutes before this hourly candle closes. I can kind of like see why you think it might want to go up, or why it might want to break up higher. We have all of these like really big wicks down here just failing to push lower. We have a recent attempt to break the highs over there with this candle over here, but we have another high point up over there that could theoretically be tested. When price did start pushing down yet again, let me just switch off that. When we did come back again, we did make this big wick area over there, strong upward candle, and then at this point now, when we tried to push lower than the low of this recent swing point, we didn't even come close. So I can see why you would think it would potentially go up. On the 15-minute, I don't know, like, I'm not trying to get lower than this point, so we'll see in the next 5 minutes or so what it's going to do. I am inclined to think that this is most probably going to come and hit my stop loss, but I don't trade with discretion. I don't, close a trade, or try not to at least close a trade halfway through profit. So I'm going to leave it. I'm going to let it just be.
Good plan, my man. Good plan. We've retested and wicked to the downside on gold, which is looking good. So we could continue to the upside now. Just gonna, like I said, I'm just gonna wait it, leave it be. We've got 5 minutes before the hourly candle closes. And Jinky saying, I pressed down like you did not say up or down. Always up.
Press that like button. That's why we went like this.
Always the up button, my man. Always up.
What is this? What is this? I can't eat this. This I can eat. This is flavorful.
Full of nutrition.
Yes,
full of nutritional and educational values.
Changed it now. Thank you, Angika.
Kamushi saying, new here, let me subscribe first. No.
Smart man or woman. Smart person.
Like first, then yes, dude, I don't care which order you do it in. Do them both. Do them both. Smash that like button and smash that subscribe button and share it. Share it with your mother, your brother, your sister, your uncle, your next door neighbor, your cat, your dog, your nephew, whoever wants to watch this stream. Make sure you share it because they are going to become profitable just by watching us. That's a big claim.
I don't think it quite works like that, but good attempt. Good attempt.
But yeah, I mean, that's not necessarily clickbaity because we do have so much value that if you took even a fraction of the value that we share on me and Richard's session and on the other guy's section, but we are the best, let's be honest. If you just take a fraction of the value we share, the chances of you becoming profitable do increase exponentially, but are never guaranteed. So not necessarily clickbait. But, I mean, don't take our word for it. Test it.
Yeah. Test it.
Test it yourself and see what happens.
There was a question that I saw earlier, but I completely skipped over it.
Seen here, gaming side gold buy. Yes, I am indeed in a gold buy. Do I think it's going to work? Yes, otherwise I wouldn't have bought it. Do I think you should buy it? Not unless it's in your plan.
I was about to say, do I think it's going to work? No, but...
No! Have I taken it anyway? Yes!
Crypto Knight saying, hey, Rich and Will, do you remember the New Zealand dollar Japanese yen conversation? The pattern which repeats every year last week in December. Yes, that was a conversation.
Vaguely. Yeah, vaguely.
Griff, whom I expected was going to be here today, and he never arrived, so I'm a little bit sad.
I was a bit
because
sad
Tuesday
about
is
that as
Griff
well.
Day. Yes, but yes, we had that conversation with Griff last week about a pattern which is like, let's call it a Santa reversal. the last few days of December, but we only went back, I think it was 2 years, for the beginning of 2025 and then the beginning of 2024, where we saw those things, but I did not go back further, but he did. So, yeah, I do remember that one. So looking for a reversal on NZD JPY, roughly at the end of the year. So if we go on to the daily, generally the idea is that you would have this upward movement, and then on the very last few days of December going into January, you would have this absolute tank down and then a slow rise up again. But I haven't specifically looked for it, to be dead honest with you. So going in the opposite direction as what the trend was going, we have an upward push, try to push down, this sideways up and down action, and then a break, and then maybe a potential retest and then push up. But I don't trade NZD JPY, so maybe don't take my word for it.
Like I said, go test it yourselves. It's the biggest thing. That's the biggest thing I can recommend, is you test it yourself.
Yes, that's definitely I think that's the best thing you can do. It's just kind of like take what you see here and go and see if there's any validity in it to incorporate it in part of your strategy.
Go apply it somewhere. Go apply it somewhere.
Yeah, at least test it first before you just apply it. Just test it first.
Yeah, of course. That's what I meant by apply. Apply it and like you're back tested and gather some data.
Yeah.
Like I said, we're both profitable full-time traders. We don't talk shit. We're not here to sell you some scam dream. Oh no, we do talk shit, just not about our
strategy. We do talk a lot of crap.
Yeah. So we do hold value here. We do try and answer the question as best as possible, and you can tap into our wealth of experience and knowledge that we have got in the market, and just see if it works for you. See if it works for you. Not many other places can you find this much value for free and honesty in a community. So
here's an interesting thing from Anjika saying, I learned from here that up and down equals retesting old wicks. So I made that into a trading chop with big success until it breaks one way. Trailing stops never work in my MT5. Oh, sorry, that's Jutser. Sorry. Trailing stops. It turned out to be an 83% win rate. That's pretty cool.
Dude, that's
I like that. Jutser saying, trailing stops never worked in my MT5. They always close a minute or two later. What is the ideal setting? 200 plus points? Well, it really depends on the time frame that you're trading and what was the average move in general. If let's say you have an upward trending asset, look for the typical sizing of the previous swings lower, as an example, or reversal. Let's not call them reversal points, but let's go and look for. Here's a good example. So this was yesterday in NAS. Let's say hypothetically we entered the trade on this candle, just as an example, and we have no set TP as an example, and we're just purely going to run on the idea of stop loss trailing. So a good method might be everywhere that you have, so this is the entry point, every time you have a reversal and then a continuation lower and it breaks this swing point. So let's just move that out of the way. There's your entry point. That is your entry point. Price pushes lower from your entry point. It attempts a reversal, which it fails, so it's just pushing up ever so slightly. The moment it starts pushing and breaking this section over here, you move your stop loss to just above, let's say 1 to 2 pips, 1 to 2 points, that kind of like thing on average, above the most recent swing point. There's another swing point, it pushes lower, breaks this one, you put your stop loss over there. There is another swing point, it doesn't actually break lower. So what you can then do is you can either leave it at this point over here, or you can move it here and then you just wait for the next time where it comes to test it, and then you'll get knocked out over there. So if this was your initial, if your stop loss was initially up over here at this point, you'll move it once to over there, a second time to over there, and then a third time to over there. So if your entry point was on this candle as an example, and your stop loss was just above that point over there, you would eventually have a trade that looks something like that. It runs and it runs and it runs, and eventually it gets knocked out over here as an example. So what you need to do is you need to go and do back testing to see what is the typical run time of a trend and how big is the reversals within that downtrend or uptrend as an example, and then just move it ever so slightly above that swing point. So I know that's how Griff does his momentous movements, and he can, let's say, risk 1% and then eventually gets a 6R or a 7R trade, and sometimes it's not even 6, it's a 1R trade. But it's the runners that you want, and then where you put your stop loss is just slightly above a recent swing point. Oh, why did it freak out like that? You just put it above a recent swing point, give or take a little bit of space for it to breathe, just in case it wants to come and test it again. Same, there's another swing point. Again, there's another swing point. So a swing point is every single time price attempted to go in the opposite direction of the current trend. In this case, it's a downtrend. It attempted to go in reverse, and then you will only move it once you have a candle that breaks lower than that most recent swing point. Then you just move your stop loss from
absolutely.
there, from up over here to over there. That's what I would suggest.
Awesome stuff, man. That's super cool. Just a couple more questions now before I head off. I've got a very busy day today. Like I said, this week for me is going to be absolutely manic, just prepping and planning for my move. So I got to shoot off really, really soon. So I'm going to love you and leave you guys shortly. But I'm just going to finish up with a couple of questions. Well, this is a statement, but gold is going up. Hopefully, my man. Hopefully, because I'm in a buy. So we'll see how gold goes, Alphinius. I'm already 1.5% up on gold. Entry 4334 yesterday. Awesome stuff, DJ. That's absolutely sick, mate. Big congratulations on that. Judges are saying, here comes the hour. Absolutely.
The hour hits.
We got a nice close above on the hourly, so that's quite nice. DMC Trades saying, can I copy trade to the Fivers account from my Master Vantage account using an EA? Technically, yeah. No, I'm going to say yes. Can you physically do it? Yes, 110%. Are you allowed to? I don't know. I don't do it. I can't see why not. But again, speak to, if you haven't checked the T's and C's, if you've checked the T's and C's already and it doesn't say, speak to support. That's the last thing I want, is you guys or yourself to be banned or to be to breach any rules. Or maybe if you think you're allowed to use EAs, maybe you use your Fivers account as a master and then trade copy onto your personal account with Vantage. That I know you can 100% do. But just double check with support. You know, I don't want to go giving you some false information. As far as I'm aware, yes, you're allowed to. But just double check, man. Just double check. Judges are saying, nice, thank you. You rock, Richard. Richard, you do indeed rock, my friend. You are an absolute legend. But guys, I'm going to have to love you and leave you. We have got 130 likes on this video, which is absolutely incredible, guys. Nearly 200 of you watching, 133 likes. Just before I leave, can we absolutely every single one of you say a big thank you to Richard for joining, and could you make sure that you smash that like button? We have got two fantastic guests coming on in just a second. They will be here, and I'll try and stay a couple more minutes until they show up. And then I'm going to have to love you all and leave you. But guys, thank you so much for joining, each and every single one of you, for the fantastic questions that you've been putting in. I hope we answered them okay for you guys, and I hope it made a little bit of sense. From Victor,
my man,
Catalini shows up.
Hello.
Well, hello there.
Another instance, another opportunity with you guys. How is everyone doing?
Good, Victor. What's good, my man? How are you doing?
I'm doing great. I'm ready to hit the markets.
That's what we like.
That's awesome. when we speak good things come into existence. We spoke about good things, and look, Victor arrived. So
Exactly.
that's how it works. The universe.
That is so kind of you. What peer is that you're showing, Richard?
What peer?
I see it already. No, I see it already. It's a NAS.
Oh yes.
Yeah.
I had a NAS trade earlier today. That was a nice little winner. I decided to get in on NAS again, but it did not have the best reaction over here that I was looking for. This is more in line with what I am looking for. A little bit more clear structure. It came to the same area. Didn't have quite the same reaction, but I thought it looks good enough. I'll enter it. It almost came down and took my TP. Then went back to break even. Tried to push again, failed yet again, and now it's just kind of like sitting here, roundabout break even. So it's probably going to be one of those that just,
yeah,
kind of like does that.
I know. It looked good though. Yeah, it was a really nice trade.
I mean, I entered it according to my plan, and you're not going to win every trade. So I'm not bothered by whether or not this one hits stop loss or TP. I'm following my plan. So
yeah, nice.
Nicely done. And the risk reward is more than one, so that looks good.
It started out as a 1-to-1. During London session, I trade 1-to-1s. So in this case, this is what it started out as. But once it gets to, let's say, 50% of the fill of the take profit in terms of floating P&L, I kind of move it to a 1-to-2. So I reduce my risk. Let's say if it was 0.5%, I reduce it to 0.25, and that's what I did here when we reached this area down here on the initial trade. When we reached somewhere over here, I think it was 20 something, somewhere over there, I moved my stop loss from the 1-to-1 to a 1-to-2 ish, somewhere around there. So I've just reduced it.
Good.
Awesome stuff. Right, I'm gonna have to love you and leave you, Victor. Can we have a massive welcome to Victor? And, thank you very much for joining everybody for our deep dive into the questions and to the markets. But I'm going to love you and leave you and shoot off. Guys, can we absolutely smash that? Only 11 likes now to 150. We were close. We were 11 likes off on our session. I think that's pretty cool. Guys, let's see if we can smash it up to 200 likes for Victor. Guys, thank you very much for joining, and I shall see you all el mañana. Thank you very much, guys. See you tomorrow.
I myself as well need to hop out. I have one or two things that I desperately need to get to before the end of day today, and it's already 3:00 in the afternoon, and I still haven't gotten to it. So, Victor, I'm also going to love and leave you. Sorry for the ditch life kind of like thing. You're just in and we're getting out. So, normally I would love to spend a little bit of time with you, but today I seriously cannot.
No problem, Richard. We are very grateful for.
If I don't see you, good luck with the chat today. They're all very, very active today, so it's good. And I hope the markets treat you kindly.
Well, those are very nice wishes. I thank you for that, and I wish you the same. I hope whatever it is that you're going to be doing, it turns out to be well. And the market, I mean, the trade you're in, I hope that goes your way. What else can we expect for and a chatty chat? That's what that's what I wish for myself. So have a great day, Richard. Thank you for holding the fortress while before I came in.
Awesome. Thank you very much, Victor. You have a great day. I'll see you.
All right. So that was Richard. How is everyone doing? Even though I asked that already at the beginning, let me know in the chat. I'm going to go about 5 minutes or so into the chat. Let's see who is with us today. We have, let's see. All right. We have Louis Van Alven as well. These are the regulars in our few of our many regulars in our session. Stephen Chipeta, how are you doing, my friend? And many others in the chat that I see right here. Great stuff. All right, so we are looking at EU on the chart. I'll break it down shortly. Um, and Alfunias, how are you doing? Great stuff. We had a wonderful session yesterday on Discord. So right away, I want to invite everyone who is interested in a different format, different platform. After our YouTube session, we get together. It's not always my person. Sometimes it's different. Sometimes it's Rich, sometimes it's LJ, but we break down the market for you, and we talk about and everything related to trading as well. So that happens on Discord after this stream. It's a great experience to join as well. If you don't know how to get to the Discord community, it's a free community, but you do have an account with the Fivers, right? So any account, any size, it can be any account, right? Go into the dashboard, left upper corner, you will find the icon to get in. All right. Hello, hello, all of you. All right. So Leos as well. Okay, let me take a look at the charts to see what we have here. All right, so let's take a look at firstly at perhaps EU, because that is has been moving quite nicely on the daily time frame. Actually, let me start from the monthly. For those who are a little bit new, perhaps haven't seen my breakdown from the last couple of days, or maybe in the last few weeks, where I, break down these the higher time frame of of EU. All right, so what we have here is a monthly. The highest time frame that I look at has a reversal pattern and reversal in the direction of the trend. That's the beautiful one, right? You can see we had a trend line that is now broken and retested and is going in the other direction. However, the trend line indicates or lower highs as we so far that sequence has not been broken, and in the direction, right? So we have a counter trend move in the direction of or counter, so counter to the trend, and there we form a reversal pattern indicating a possible continuation in the direction of the trend. So this would be the head, the left shoulder, the neckline. It breaks it, it comes back, creates the right shoulder, but it extends the pattern even further. And you can have these extension of quasis um, more than once, meaning that you can still use the same head, the same left shoulder, meaning also the same neckline for the second and sometimes even the third. Doesn't happen very often, but even a second and possible a third right shoulder. Each one of those right shoulder is tradable. Okay, so we are currently at a level that we could be where the market could be making a second right shoulder, and that's right here. And the market, we don't know exactly if it's actually going to happen or not. We never know that, but given the price action, you can get a gauge. You can gauge whether or not what the probabilities are of the reversal happening, and the market is reacting to the structure from the left, so that's promising. That's interesting. Doesn't mean it's going to happen for sure, but that increases the chance that we could have a reaction, a much bigger reaction into, and possibly going much lower. But that's looking into the future. We don't There's a couple of indications that that could happen, and as long as those are being created and being validated, it is warranted to take the trade, right? So this is the monthly, and we are now retesting this seems little, but of course it's not, this fresh order block, right? And as long as that's respected and prices does not go above the 1.19188, right, the level that I'm showing right here, that idea is still um, valid and should be looked into as a possible setup short, as long as you have alignment, of course. All right, so this is the area that I'm talking about. This is the monthly time frame that we're currently retesting, which is also overlapping the structure to the left, which I just explained from a much bigger macro or super macro for the last couple of years. What putting things into context. So on the weekly time frame, there isn't really anything here for us to trade or to look into. It says here weekly, but it's not a weekly entry order block because there's no quasi on the weekly. So let me change that. It's a regular weekly, and it's not even as fresh anymore, as long and actually, well, to be fair, it has been retested on the 8 or 9 candle, meaning still tradable as a supply area. But the fact that it created a bullish order block right there tells us that the market is not ready. It's not ripe on this time frame. It's not aligned with the monthly to look for a short yet until we break this level, right? And that hasn't happened and may or may not happen anytime soon. So we'll have to wait for that. So the whole thing, the whole idea of going using that monthly time frame as alignment, as the beginning or the basis of the alignment, needs to be paused and needs to wait for this structure, this weekly order block right here, bullish, to be broken, right? To get this the market confirming that it really, the sellers are in control and we're likely to be going lower. That's not hasn't happened yet, and so we'll have to wait for that patiently. Let's take a look at the chat in the meantime. Zella Le Mandela. Pretty sure that's not how you pronounce it, but I tried. The No, you don't have to be. Very good question from Antoka Horo. You don't need to be funded. Just have to have an account. It can be an evaluation account, and just have to have an account with the Fivers. That's it. It's easy. The server, the Discord server in itself is free, but it is you have to have access to the dashboard. That's the point. It's on the dashboard that the link is, and once you're part of the community, you're there's no even if you lose, let's say, the account, your access to the community is still there. All right, so there we go. So funded, it does not need to be a funded account. Okay. Let's see. Let's go back to the chart. So the so that's the weekly. So the weekly is not ready. The weekly is actually is telling us to look for longs from this area because it's a fresh order block, right? So we should be looking for the longs from the order block, even against the trend or the direction of the monthly idea. When and if price gets there within a certain number of candles, which it hasn't yet. So the weekly and the monthly are not aligned yet. But let's go to the daily and look at how this is showing right now. So we do have a reversal pattern, which is within the monthly structure. And the relevant structure or points are these that, there are multiple points, but that's the last one, the one that creates the neckline, which is right here. That's the left shoulder, the head, the neckline, the swing point that creates the neckline. And we have the break of that neckline. It goes all the way down and comes back to the only structure. Actually, there was another structure here, but that one has been invalidated already. The only structure left for a possible reversal. Possible. These patterns, they indicate possibility, right? The intention, an attempt of the market, but nothing is certain, on in the financial market, on the forex, for sure, right? So the only certainty is that there is no certainty, right? It's all probabilities. So even if, while we have these reversal patterns, you will have to, put the market, or put the probabilities in your favor by adding confluences, adding alignment from different time frame, adding indicators that indicate maybe that sellers are getting the upper hand, or price action, or structural break, or lower time frame reversal patterns, and so on, right? You get the point. You stack these things, each one of them giving you a little bit of an indication that the market wants to go lower. But if you add them on top of each other, multiple of these things, on different time frames, you get the point that your probabilities will start getting, a bit more nicely in your favor. Still probabilities, you'll still not be able to call all of the reversals successfully, but you will have an edge. At least that's the idea. So the reversal pattern does give us a nice little area, as this daily order block right here, which is, we already had a first reaction from it, but it hasn't broken any structure, at least not on this time frame. Price pushed forward and is, still in a bullish market structure, because it's making higher lows and higher highs so far. So the let me get this out of the way. All right, so that's the daily. That's the daily time frame. Well, let me go closer to see if we have any indication of a possible. Well, so far there isn't anything, right? So what I would want to see is, I would want the daily within this area to give me an indication that sellers are, they're taking over. That could be a pin bar, that could be an engulfing, that could be an outside bar, it could even be an inside bar, right? Anything that indicates that sellers are actually taking over at this relevant area, which is the daily structure from the quasi to the left, which is within a much bigger monthly supply area. Hasn't happened yet, right? That's the point I'm trying to make here. Yes, we see the possibility of a short, right? A short that could be very lucrative if we catch it, but the market needs to actually start moving in that direction before you can actually take the trade. At least that's how I trade, right? I let the market um, start indicating by reading price action, top down, when it is starting, maybe reversing. It's a maybe. It's a possible reversal, but you start getting it at the earliest possible moment, and then try to ride that move out. Hasn't happened yet, at least not the monthly. The market structure, as you can see here, the impulsive phases of the market is still to the upside. See, the bigger candles are the bullish candles ones, the bullish ones, I mean, and the bearish ones are the compressed. They're smaller, indicating that that's the retrace, or the the retrace, the pullback, and the impulsive move is to the upside. So that has to change before the market actually reverses and goes much lower. Hasn't happened yet, and maybe it will not happen. There's no way to know for sure. uh, but the only thing we can do is look at the behavior and the structures that the market is creating on the different time frames. So the daily isn't ready yet. At least it's not telling us that it's ready yet. So there isn't anything to do. That's my point. On the 4 hour, let me take a look. I took a short yesterday. It was a nice short. Worked out nicely. It was a 1 to 4. right? So within the structure, we do have a H4 quasi, right? I hope you can already see it since I've been showing these patterns, all the time, right? You have an established uptrend, and the structural low, the neckline is broken, and with that broken trend line, you can then mark from the top to that lowest point, and look for areas that are interesting. I use the 50% retracement as a cutoff level, but you don't have to. That's arbitrary. That's just a decision that I made at some point. But you could make it more selective. You could use 60, 70, whatever you like trading. You could be even more accepting or tolerant, and maybe accept 40%, right? So that's up to you. I use 50. It's a nice midway of the move, and that leaves us with one entry, or actually it leaves us with, yes, with one entry order block. Let me mark this. Let me see if what I'm saying is actually correct. So let me double check if that's the only order block. So we have the open here is 71, and the close is 72. So yes, that's the only structural area. So this is the only area that I'm interested in this quasi. So I'm gonna be marking it again so you guys see it. This is one idea, right? If price reaches this level, then I want to be ready to take the possible short if the market starts tanking, seller starts gaining traction, and creating those structures that we need to see and we assess as being confirmation. So that hasn't happened yet. So far, the market, we haven't reached this level. So far, the market seems to be, having difficulty breaking this higher. Not only that, so that idea that I just indicated, that's something to wait for later. Maybe, who knows when that will happen. And I would target, to begin with, the lowest point of that quasi. I wouldn't get in on the H4. I would get in on the 5 minute perhaps, or maybe on the 1 minute, depends on how the market presents itself. So that's that. Let me double check here. Okay, so that's one idea, but the idea is not current, in the sense that that's something for the near future. Could happen today. It's about 20 pips of today's high. Not even, actually, yeah, about 20 pips of today's high. So that's certainly possible to be reached today. And so it is something you need to watch out for today. But so far, the market seems to be making a turn before that level. Now, the turn that has already been made, we have a couple of things here. The market is kind of sideways, and it has to do a little bit with the festivities or the holidays. You have an H4 order block here that was nicely retested right there. I didn't take the trade. We can take a look if there was a trade to be made, and there's a much bigger H4 order block long, which you know we don't have a lot to go for the long, because the market has been creating so far almost exclusively bearish structures. But hey, if there is an alignment on the lower time frame, I would take it, even if there's nothing else. That's enough for me to take it, right? So we can take a look at both of them, meaning from this level, take a short. Actually, that already happened. That boat already sailed, and take a long from here if there is a reason to do so. And a reason, by reason I mean H1, H2 alignment with the H4. There isn't anything here on the H2. There is this H2 order block that would have been I wasn't trading at that time. I was at the gym, so that wasn't able for me. There wasn't something that I could trade. Let me take a look. So basically, this would have been 11 o'clock. which is 3 hours and a half ago. So that means that basically, yeah, this is the area. This was when the H4 was already created. That means that this area does have did so this is already happened, this setup. I was at that time, as I said, I was at the gym, but that's because I'm currently in a different time zone. Normally that would be my trading hour. There's no refinement of the H4 order block, but it's already so tight, not needing really a lot of alignment, a refinement. I mean, if it's a huge order block like the one below us, then you really need an H2 or H1 refinement. But if the H4 is already, very tight, H1 grade tight, then there's no need to go even further. So let's look at the 5 minute to see if there was an area after 11 o'clock, because that's when the on the H4 the area was printed. So after 11, you need to check that. There we go. I'm gonna mark that, and of course you can see that it did have, on the 5 minute, it did have a couple of areas. Actually, you could use either this one, even perhaps that one, but let's use this one as the neckline. And you can see that there wasn't an entry, so I wouldn't have entered. Even if I was watching the market, there wouldn't be any entry order block for me, not on the 5 minute. Why not, you ask? Let me double check. This high is 79.8, and actually, I let me mark this as it should be, because they're equal highs. High is 79.8, 79.8, 79.8. So that means that this can be an entry order block. This can be considered an entry order block on the 5, and that would change everything. I thought that this area, let me indicate it with I thought that this high was higher than the previous one, but apparently it isn't. Right? It's an equal high, and that tells that, according to the rules that I trade by, that this is an entry order block, and you can see that indeed the price came back and only needed a couple of wicks interacting with that area, that entry order block, and then you could have taken, in here, you could have taken the short to the level, that level to begin with. It would have worked perfectly. I didn't take it, but just illustrating how, and there could be even more than just one entry. Let me double check if that's the case. Let me double check here. Don't forget, guys, hit the like button, subscribe to the channel if you think if you think this is a session or a stream that is helping you. If you feel this is something that is helpful to you, then don't forget to do something back for the fivers, which could be the like, the subscription, or both of them. All right, so we do have, let me check, 1, 2, 3, 4. So no, nothing on the 1. Nothing on the 2. So it's probably only the 5 then, and it's only here, but it didn't trigger on this one. So yes, so there wasn't any other signals on the time frame that I use, only on the 5 minute. But it was still a nice one. And the initial target is the lowest point of that quasi. but this would be a nice area to target, and the market just reached it perfectly, right? And that would be the the first trouble area. Looking at the using the hourlies, you can use the quasis. Uh, the end of the structure, you can use the next structure in the opposing direction on the H1, H2, H4, depending on how trendy, how impulsive the market is. If the market is very impulsive, the market is currently quite rangy, right? You can see how it has relatively equal highs, and it is making lower lows. Yeah, it is, but not exactly very impulsively. So in that case, you shouldn't be targeting the H2 or H4, and God forbid the daily, right? You should just target the H1 or just the quasi. Will give you good probabilities for your TP, depending on the time of the day, of course, as well. So that trade if was from yesterday. That was the 1 to 4 that I mentioned. So let me take a look at all right, so that's one thing. That's the sell side already happened. Yeah, let me check if there's anything else. Yeah, it already happened. There isn't a lot for us to do, and let's see if there is a possible buy area or buy opportunity. This is the H4. Let's go look for alignment. um, Let me take a look for alignment here. All right, so there isn't anything on the H1, H2, I mean, and H1. There is an order block, but it's not fresh. So basically, there isn't anything to do. I can only use this as a target to get out, as I just indicated, get out of a short, but it's not enough for me to go long on. So there isn't anything long to go with, any setup, at least not on EU. We can take a look at dollar cat as well. Yesterday um, we were looking at dollar cat, and it is looking quite nice from from quasis and order blocks perspective. So let me check here how many likes we have today. um, how many do we have? How many likes are we do we currently have? 130. Well, that's not the likes, that's the viewers. 130 right now according to the platform, and um, I'm going to check what the what the current like level is, all right? The number of likes. So let's check that out. So how is the holidays going for you guys? How is the holidays? Are you trading on these days? Are you not trading? Are you focusing on spending time with family? Are you doing backtesting? Instead of trading, doing backtesting. That it's kind of weird hearing myself talking. Of course, we have 93.8 subscribers. So don't forget to hit the subscription button. And the likes is at 152. Okay, all right. So we have a number, 152 so far. I'll check it in a little while. In terms of the, let's see if we can hit the, I don't know, 175. Is that too much to ask? Hey, let's go for 200. What do you guys say? 200 likes today. Let's make it a goal. We have about an hour and 18 minutes to do so. So let's see if we can reach 200 likes. And for the end of the year, we still have another session tomorrow on the 31st on Discord as well. So it's gonna be fun closing the year, spending some time together in our community, in the Discord as well as in the on the YouTube. All right, so there isn't really anything for me other on EU. The trade is already gone, and if you look at the H4 at the daily, It doesn't seem, if you look left, it doesn't seem like there is anything stopping price. At least on the daily, there isn't. Let's look at the H4. There isn't on the H4 as well. You can already see it. There is a structure there, but it's not fresh, and it's H2. Not exactly something to really take into account. So it's already been tapped into multiple times. So it's I would say it's not too difficult to break through it. And if that were to happen, there isn't anything to stop price all the way to that structure, or that daily order block, which starts at 1.17203. Okay, so that's the only. So basically, I don't have anything, any setup to look for on EU at this moment. Let's take a look at what do you guys say? Gold? You guys want me to look at gold? Let me check here. All right. Let's check the chat. See how chatty you guys are. Okay. All right. So we have 151. Thank you, Zara, of course, for that information. Zara says the holidays could be better, but grateful either ways. Yes, grateful is it's a powerful thing if you practice it regularly. I mean, it just makes everything better. Uh, Honestly. Elfunias says, "Can't wait for the market. Are you guys, who is watching us right here, right now? Are you of the same opinion as Elfunias? The market feels very weird during December always, so looking forward to going to January faster." I know the feeling. Even though I do not stop my strategy, my main strategy, because the statistics tells me that I should just trade as usual. Um, the market will behave differently. I know that. We have seen that. I've seen that so many times. Um, and there are some exaggerated moves like we had in dollar a couple of days ago, dollar weakness, and then a comeback, or push back in the we had some dollar strength again, and that's a little bit more often and a little bit more exaggerated in during the holidays, and it has to do, of course, with the volume and the window dressing at the end of the year. It's not only end of the month, but also end of the year, so you see these rearrangement in the market, so to speak. Alfunias, I don't know. I don't know. I have difficulty defining if I'm in holidays or not. I am traveling, but I do that, you know, more often, and it's not really a reason for me to not trade and not stream. So I don't know. I am in on holidays, but yeah, it's not exactly what you. I think not the traditional holidays, taking off of work. Then again, I don't see trading as it is a profession. It is my occupation, but I don't see it as work, like something you have to take off from. Uh, at least if I'm not trading, it's because I'm doing something else, not because I need to take time from trading. I want to be trading, so I don't know. You get the point, I guess. Um, uh, Sasaki FX wants to know if I'm not sure what NIN is, if that's a certain national identity number, I suppose it is, or something similar. I wouldn't know, since I'm not, part of the support um, department. I wouldn't know all these details. What I do know is that there is support on our website, they are live, so you can go on to the website, thepfeifers.com, and look for the live agent. I think there's there's a little icon that pops up on the lower right corner, and there you can chat with them and ask them all these questions and many, many more. Actually, all the questions you may have. Study with me. Um, okay, has a question. I lost till now $3,000. That's a that's a big amount for a lot of people. Would you suggest me to do? How to approach trading? Well, first of all, you've had some losses. I still don't know, if that is catastrophic for you, or if that just 1 month you can recover from that loss. So the money, the dollar amount, it's a sizable. That's a decent amount for just about for most people. Um, what I would do is, well, and I don't know how much you were risking, what kind of strategy you have, how much back testing you have, validation you've done on the strategy, and I also don't know, how consistent, how disciplined you are. So without all these information, it's kind of difficult for me to give you a personalized advice, and these streams are not financial advice in any ways, right? So they're just tips and opinions. But not having complete information about your situation, study with me Q6D, I would say you should not trade live for some time, right? Go back and first of all, the first thing I would ask you is, do you have a strategy? I hope you do. If you do, like, and it may sound weird, you would say, yes, of course I have a strategy. Well, but is it well defined? Because you'd be amazed how many traders are trading an idea, a vague idea, or maybe even a very clear idea, but in a very vague way. Meaning, sometimes they do it this way, sometimes they enter another time frame, sometimes they hold, sometimes they take it out on whatever happens in the market. A lot of variation, and that does not help your consistency. So, I would the first question that I need to be asked, to be answered is, do you have a clear strategy that is written down and that is rule based as much as possible? And the second question is, are you following it? Right. So having the plan, a good trade plan, objective trade plan, is one thing. The one that has been validated, right? You have proven beyond reasonable doubt that it is profitable, so not with 20 trades, and preferably not with 50 or 100, but more than that, and is clearly showing consistency in profitability. That's one thing. And the second would be, are you following the plan correctly? Right? You can Our mind can trick us into thinking that the signal is on, that we're ready to go whatever direction with the market, but maybe that's not the case. Maybe you're not following it correctly, or not following it to the T. So those are the first few things that I want to ask, or actually want you to ask yourself, because each one of them, depending on how you answer them, will direct you into different direction, right? So if it's the strategy that you don't have, or you don't have it defined well yet, then obviously that's what you have to work on, right? And if it's well defined but it's not well validated yet, then that's what you need to do, right? Gather data, make sure that it actually is profitable, not on a short period of time like a month or so, but actually on a more longer period, something that is more robust, that tells you, this strategy is not happen to be profitable in, I don't know, uh, 3 months ago for a month, but actually has been profitable this whole year, except for perhaps 1 or 2 months. And going through the whole period, it's still profitable, right? Things like that will indicate, will let you know whether or not your strategy actually has edge, or it was just a fluke, a positive fluke, where you were profitable for few weeks, a few months, but actually there's no long-term consistency in the edge. So what first thing is the strategy, and then you would have to look, well, maybe the strategy, if the strategy does have edge, um, have you been actually trading that the strategy the way you should? And if that's the problem, then you know then what to focus on: your execution, your discipline, your psychology. And so it's a different route, but depending on how you answer those questions. And if both of them, if you do have a strategy, it's well validated, and you did execute it correctly, then I would say the you would have to have more data, because probably the edge, the market has changed, and your edge is has diminished or has gone away, maybe temporarily, maybe forever, I don't know. Or you need to learn how to filter when to use the strategy better. Maybe there are certain market conditions that are now present that you were it doesn't suit your strategy, right? You did the strategy is okay, you did everything fine, but you failed to understand when to use the strategy, right? So that's a question of filtering. For that, you need more data to start seeing those patterns. Okay, maybe in low volatility, maybe in holidays, your strategy is not something you're going to be uh, using profitably. Okay, all right. I hope that helps you somewhat. If it does help, then let us know. Let me see. Let me go back to the question. All right. So it was study with me. If you think that that was helpful, don't forget to hit the like button and interact with us. Come back to the chat. Let us know if indeed where the problem is, and give us some feedback if you can, so others can learn from it as well. Elfunias here is actually, I have this inconsistency with my strategy. Okay, maybe you could advise how do you set up your rules for your strategy. Of course, I could try. I feel like I need more confirmation, but I can't find my edge at this point. Okay, well, I don't know anything about your strategy, my friend. So I will have to I don't know if I can do it, through YouTube, but I will need some information. I could give you some templates. Um, you could, uh, when you're talking about confirmations, um, if you have a strategy and it's not consistent, um, how do you know the concept is profitable? Um, Before you think about a strategy, you have to think about what are you trying to capture, right? Is there a move, a pattern that is reliably recognizable and identified, um, that and reoccurs often enough, right? And you have to measure that, not the strategy, not your performance of the strategy, but just the pattern. Like, how often does the pattern occur? How big is it in comparison to, I don't know, surrounding structures, or maybe whatever, because I don't know what exactly you're trading, how the strategy is. So you need to collect data on the phenomenon, on the pattern that you're trying, right? Everyone is trading a pattern, right? A couple of things happens, and when they happen in a certain sequence, it means that on the last part, there is a prognostic value or predictive value as to what will likely happen next, right? That's the pattern. Like in my quasi, I will show you guys what I mean. If the market, for as an example, if the market does, the quasi pattern, breaks the neckline, goes back, and it comes to a fresh order, not a fresh order block, a valid order block that has a certain characteristics that are you know, satisfied, like above the 50% retracement, not more than a certain number of candles, has higher time frame confluence and alignment, and isn't wider than a certain number of pips or percentage of the some kind of ATR. When all of those things, that's the pattern: established uptrend, breaking of the neckline, coming back, and all those the other things that I mentioned. If all of those things lined up happen in a certain sequence, then I can tell, or I know that if the market reverses from the level, there's a good chance that it will go at least to the level, the lowest level of the pattern, and likely even lower, but at least to this level. Okay, so that is a one example, one template of the pattern, and the question is it enough just by the pattern being created or being printed? Let's say this level is a little bit higher, right? And the pattern, market gets to it. Is it enough? And that this is something you have to measure. And this is what I meant. Is it enough just that the market reaches this level, reaches this order block? So without any confirmation, some strategies don't need confirmation. Okay, you can take them on, take them without the necessarily needing a confirmation. I, from the way that I wanted and I designed and I defined my trade plan, I wasn't getting a lot of um, consistent performance or profitability from getting into this quasi pattern, even with everything that I use. When I didn't wait for the confirmation, it didn't work. Sometimes it worked very nicely, and but I couldn't limit the win rate as well as when not limit, I mean, you know loss rate, I suppose I should call it, right? I couldn't limit my losses very well. Instead, what I do is, and this could help as an example, I would go into this order block on the lower time frame and look for, let's say this is the lower time frame. So what you're looking here, right? So this is, let me mark it as such. So, right, so this is this area, right? I hope this it is clear. This is a zoom out place of, let me take this out. So this area, right, is, let me mark this. Trying to make the illusion of a zoom, right? So basically, this area is this lower area is the same area as you see above. And what I look for indications, and these are the confirmation that I can suggest to you. I look for indication that the market is reacting and thus likely to be in the process of reversing from the level, because the whole idea, the whole phenomena is that these structures, these order blocks, that is in my case, doesn't have to be in your case, that these structures are they are supply zones, right? Supply and demand zones where the market, where sellers are waiting for price to get there to activate their sell order. They will go, there are either limit orders there, or as the market reaches the price reaches this level, these market orders come to the market. So they're not limit, not pending orders, but market orders, or both of them, right? In reality, is both of them. And what I want to see is that if this is indeed, the whole pattern, let me take this out, this whole pattern, the quasi pattern, will work best if the market actually reacts of these levels, right? These let me mark it, let me use it like so. If it actually does a reaction, the whole pattern is, at least my strategy is that the entry order blocks are going to be used. That's not always the case. Sometimes the market reverses without using these entry order blocks, and other times it doesn't reverse, right? So I already know that I'm gonna have these losses, but it works best when they are actually used. So that's the pattern, that's the phenomenon that I want to capture. So what I want is, I want to I only want, ideally, to be in the trade if the market is actually going to reverse. That's impossible to know in advance. So that's not within my control. So the only thing I can do is to try to pick up indications that the market will do it before it actually does it, right? Before it actually reverses and goes the other way. And one way this will happen is that if you go to the lower time frames, the market will have, if you're expecting the market to do this, right, to move, to change direction, to reverse from, right, on the higher time frame, this is what you would be looking at, right? On the lower time frame, not the higher time frame, right? So the quasi, this area is zoomed in right here, right? But the market doesn't move like this, right? So the market does all kinds of, you know, swings, uh, and then maybe change direction and then go the other way. So this is, and even this isn't exactly as, the market isn't as clean all the time as visible, right? And certainly it's not v-shaped, almost never. Sometimes it is, but almost never is. So you will have to look for ways, either using candlestick combinations or indicators like divergence or MACD, to look for indications that the market has or is trying to reverse, right? For example, you could look for deceleration as we're getting close to the level. That's one idea. So you see market, if you see market doing this, right? That's that's not indicative of the market reacting to the level, right? It's very impulsive. It's not slowing down. And even if it's, let's say it hasn't really broken close above, but it's already above the area. Those are all signs that the structure is not being reacted upon. So that's one thing, right? So that's price action and market structure on the lower time frame. But however, let's say you do see something like this where the market is impulsive, but as soon as it reaches closer to that level, it starts going sideways. And it goes higher, but not exactly impulsively anymore. Actually, it starts to slow down and even starts to go sideways and a little bit, breaking those previous low. This, for example, is an indication that the market is. It doesn't mean that the market is going to reverse and go lower, for sure, but those are indications that maybe there is a reversal happening, right? Even before it actually happens, it can still continue and go higher later on, but deceleration is one sign, for example, and you have to define deceleration for yourself objectively, right? So you can see it um, discretionarily, but that's not going to help you in the heat of the moment. You have to have some clear definition of what is deceleration for you, how it looks like. Are you using trend lines? Are you using whatever? You need to find that. You need to define that. So that's one thing. And the other things you could do is simple candlestick combinations. What does the market do when when it reaches these order blocks? Does it create pin bars? Does it create uh, big rejection wicks? Does it stop creating bullish structure, right? Because supposedly the market is supposed to be right. Let me mark this here. Actually, it's supposed to be let me try something else. So it's supposed to be bullish on this side, right? And at a certain moment, there's going to be an inflection point, and it's supposed to change direction. And you should see the change of character, right? That could be a quasi formation on the lower time frame, but it could be a just the behavior of the market, where on the first leg, the leg going up before the inflection point, it is creating bullish structures, respecting them, and if it is creating bearish structure, it is not respecting them, but likely not even creating them. And as it has the inflection point, after the inflection point, it should switch around, creating bearish structures and respecting them, and either not creating bullish structures, or if it does create them, it should violate them, right? So when you recognize the behavior change between one and the other, you can understand that something has changed in the market on the lower time frame, right? And this can be on the 1 minute, the 5 minute, doesn't really matter, but eventually you should have some follow through. So you have the inflection point, where it changes behavior, and sellers, in this case sellers, take control, and in a certain moment you can zoom out on, let's say, the 15 minute, and see these candlestick formation forming, while on the lower time frame you already saw the inflection point, you already saw the change of behavior, the price action, changing, and perhaps even with quasis, necklines being broken, and things like that, right? Break of structure. So, which confirmation exactly you should be using? It's a matter of trial and error, but it should be something that indicates. Use my example as a template, and maybe yours isn't exactly. You need to mold it to your situation and your strategy, but you could be looking for, if it's a breakout, for example, mine is a reversal pattern, but if it's a breakout, you need to be looking for that indication of momentum, right? Maybe EMAs being respected, like 8 EMA, right, on a lower time frame, like on the 5 minute, or a 13 EMA on the 5 minute. Look for increasingly bigger bodies. Look for structures being you know bullish structures not even needing to be mitigated, and all of the you start getting the point. You need to look for those indication on a lower time frame, so you can get in as early as possible, but with good um, confirmation. And they could be uh, or they could be candlestick combination, let's say on the 5 minute, or even on the 15 minute, like an engulfing, an outside bar, and so on. And it could be a combination of these things, right? It doesn't have to be one thing. It could be, two engulfings is your entry confirmation, right? Or two whatever, or it can be anything. You can be creative and try things out until you find a confirmation. But you it needs to be something that actually is telling you that the market is reversing. Um, so all right, so let me check the chat for a little bit. Um, Let me check here the chat. Let me check here on the chat. All right. So we move here. Let me clear this up. All right. Let me go check the chat, how you guys are doing. All right. Greg Goodson asking here, what instrument would you say is easier to trade, FX or index or gold? Hold on, everyone. I'll be right back. All right, so I'm back. Yes. So which instrument? Well, what you want to be doing is you want to be choosing something that doesn't move very quick and is not. I now realize that my chart is not showing anything. Um, the let's say something like an Aussie dollar, US dollar. That's a pair that has doesn't doesn't move volatilely and impulsively like say the GJ. But there are many others. There, for example, I would think Euro Pound is a little bit difficult because it's very rangy. But you want to be using something that perhaps is a major, like NZD, USD, or Aussie dollar, USD. Um, it has to be something that is within uh, the currency is moves, has its biggest move in the period that you're trading, because you need these movements to make profit, right? Asian market is great for mean reversion and scalping, but that's only very limited in a sense, right? You typically need, if you're a breakout trader, you need that volatility. If you're a reversal trader, you need these volume, and for the market to actually move from the level that you want it to reverse from, and that needs volume, and you typically would need something that moves during the European session or the New York session. And Aussie dollar, USD, could be that, because of course it has the dollar, so you would be trading the New York session with a pair like that. That would be something that I would try to EU is good as well, but you want to be um, avoiding, let's say, gold um, and yen pairs that can be jittery, that can be jumpy at times. So you need to be something that is not too volatile. That it would be my advice. All right, let's take a look at the questions we have. We have many questions. I like that. We have someone asking about order blocks and fair value gaps. Yes, I can certainly talk about that. They are basically the same. They're different expression or different. How would you call them? They're different morphology. That's not a word to explain, perhaps, but they're there are different signs of the same thing, right? Or when order blocks are created, it's because one side takes control, and a bigger, let's say, an outside bar is one that one side that is being taken control of these of the market is it does so more aggressively, and when it does that, you will see this fair value gap forming, because the fair value gap is an indication of aggression, of imbalance, of one side being so taking over so heavily, so aggressively, that the market doesn't even come back to close those gaps, and those are the what is called fair value gap nowadays. um, but I can definitely show both of them. Let's take a look at um, here. For example, you can see at the fair value gap, very simply put, on dollar is, let's say, here we have a the fair value gap is very simple. If you think about it, it's a three candle combination where the wicks, right? For example, if you take these three, this one, and this one, right? Very simple. The candle number 1, 2, and 3, the wicks, in the case of a bearish fair value gap, the lower wick of candle number 1, let me actually indicate it like so, and this one is the middle candle, and the upper wick of the candle number 3, they do not overlap, right? So there is a gap, so to speak, in between them. And that's not the case with these three candles, as you can see. So that means that the move was a bit more balanced, right? There wasn't that aggression that I just talked about. But let's move to some other three pair. Let's say this one, this one, and the next one, right? And this doesn't even really have the upper wick is almost non-existent. But if you take the lower wick of the first one, compare with the upper wick of the third one, right? The middle one, you don't use, only use the wicks of the first and the second one. You can see that this is the low of that candle, right? And the high of this wick, there is a little wick there, even though it's very small, there is a wick. This difference, that's the fair value gap. There is a gap between the lower wick of bar number one and the upper wick of bar number three. And the bigger the gap is, the bigger the imbalance. Basically, it means that the market was so one-sided that the sellers, in this case sellers, were so aggressive, they were so dominant in these three candles that on the third candle the range did not reach the range of, did not overlap the range of bar number one. And that's a sign, that's a measurement of aggression, of imbalance. And these levels of imbalance are typically retested, they're revisited, and they can be used in price action for, they work as magnet that are revisited. And depending if the market, so let's say in this case, right? So there are many, let me switch perhaps price feed. So we have a different, so we don't have the lines that I had before. So let's say here, right? So that's the fair value gap, and in this case, price came back very very quickly to it, and that's another thing, like how long it took to get back to that level. That can give you some some more information as to what the market will do. But this area becomes the area of interest, right? The fair value gap, and depending, just like um, supply area and demand area, you can read the intention and the power of the market and have an idea if the market is going to go up or going to go down, depending on what it does, long term, like for many bars, depending on how it handles, how it reacts, how it behaves within these fair value gap. And so it becomes very indicative, almost predictive as to, whether the market is switching or is just coming back to continue lower, for example, in this area, right? So if the sellers were in control to create this fair value gap, right, if they are failing to hold that control, the fact that the market then breaks and takes the other side and does not, respect that fair value gap, that tells you something. And conversely, if the market comes back and the market is not able to go and close above and continue higher, have follow through, that's also an indication of what's to come, which is the follow through movement. Right. So that's the fair value gap. Basically, very simple, but it's quite nice to understand what it means on the on in the context of price action. And let's say you go on order blocks. What order blocks are, they are um, candlestick combinations, very objective, in my opinion, very useful. And what they indicate is who won the battle at that time. Not unsimilar, right? Very similar to fair value gaps. Fair value gaps, they tell you who was the winner, who was aggressive, who won the battle at that three candle period. And order blocks are basically doing the same. I personally don't use order blocks as much. I mean, fair value gap, but I do use order blocks extensively. So, for example, on EU on the daily, what we can see here, the definition that I use for order blocks is different than most people, and I understand that that could be a little bit confusing, or you know, why do I have a different combination, different definition? I want to keep things simple, and the whole idea is to have it as simple that I can see it easily, and I can backtest it easily, and I can define it easily, and I can code it easily as well. So my definition is an engulfing and the outside part. Those are the two ways that I can create an order block. The In the case of the order block, it's a two candlestick combination where one side, right, in this case the bullish side, these two candles, the bullish side took control of the battle or the period and won the battle, basically, right? So I'm looking at just two candlestick, and in my definition, the order block starts at the open of bar number one right here, and let me move these arrows lower, and it goes all the way to the lowest wick of bar one and bar two, right? So it can be one, it can be number two, depending which one is the lowest. And that's the area. And what this tells me is that the buyers, in this case, the buyers, they overpowered the sellers, which created this range, this bearish candle and body. They overpowered it, and at there was something, and it's not really important what it was, that at that moment, at that price, made the buyers be interested in coming to the market, stepping in, and overpowering the sellers. That's a good indication, even though we don't know for sure if that's going to happen in the future again. The fact that it happened in the future, in the past, I mean, is a very good indication that it's likely to happen again in the future, right? So if when price comes back, the likely reaction you would see is that the market will come back and retest the same area and move away. Whether that's going to be a continuation of with a much bigger move, or just a little reaction for the market to continue lower, that depends on much more than just the order block. It means on the market structure, on higher time for confluence, on the trend, on day of the time of the day, and so on. But you can at least expect some kind of a reaction. That's the order block idea. Um, and the definition that I use, there's more to it. There's more nuance how you do the outside bar and all of that. But just to keep it simple and nice, that's the idea of the order plan. And you can use this is very simple, very, very simple. But if you use multiple time frames and have a clear indication of these order blocks, and you can filter, what to filter for, they can be very, very profitable and powerful in your analysis. And you can combine them with indicators, with ATRs, or with EMAs, whatever it is that you use, and even enhance or amplify their predictive value for you. And very, very simple, but very, very powerful. I use them all the time. That's how I earn my money, combined with quasi. So I use quasis, order blocks, and top-down analysis and bottom-up management, right? Or price action reading. Hopefully that helps. If you think this is helpful to you, don't forget to hit the uh, like button. Let me check on the chat what you guys are talking about. Let me see here. All right. Many people coming in and chatting with us. I like that. I do like that. Um, sure. Someone asking about entries. Well, in my case, um, in my case, um, I go to the lower time frame. And so what I do is, let's say the market does come to this area, and it needs to, for my trade plan, it needs to come back. This is the order block I'm talking about, right? It needs to come back within a certain number of candles, right, since the creation is these two candles that created the order block, these two candles, and it needs to come back within a certain number, right? So this is candle number 1 after creation, 2, and so on. So we're currently at number what? Number 5, and it needs to get back to this level within a certain number of bars. If it takes much longer than, let's say, 10, then the likelihood that the reaction will be strong and will be clean diminish. We can still have it after 20, 50, whatever number, but not as often. And why that happens, I don't know. My guess is that, it fades away in the memories of the market participants. If it's only a couple of bars, let's say up to 10, then it's relatively fresh in their memories. They're likely to have their pending orders still there. They haven't canceled them yet, or they're still waiting for the market because, they couldn't buy it. When the order block was created, maybe they missed the chance, and as it comes back, they get a second chance to get in with the impulse, assuming that the market is going to go up, or maybe they already got in, but they couldn't, buy everything at once, and they have a second chance. That's the mitigation, basically, um, explanation, where they comes back and they can get it at a very good price still. So um, I would, um, I would, let's assume that happens. What I would do is I would do, this is the daily, but I don't get my entries on the daily. You could. There's nothing wrong with using, higher time frames for your entries. Um, but what I do is I want to, just goes with my personality and my trade plan, and the data that I collected, that I want to have uh, the shortest stop loss possible, but not just because, right? Not just short because I want to, but I want to have the lowest time frame that is aligned with the higher time frame that has a reason for price not to break. So hopefully that makes some sense. But what I refer to is, in order when I go to the basically, my trade plan is as follows. So whenever, for example, I have a daily area of interest and needs to get back to that area within a certain number of candles, as I explained, I then go to a lower time frame, not just randomly a lower one, but divide the current level, the current time frame, with a factor 4 to 6, right? So not 10, not much more than 6, but between 4 and 6. So that means I would naturally go, my next step would be the H4. So I would then go to the H4 and look for reasons to, in the same direction, right? So that's the alignment that I talk about all the time. And the alignment could be a quasi or a fresh order block. So actually, a entry order block on the quasi and a fresh order block, both of them are order blocks. One is based on the recency of its creation, and the other one is on the pattern that it indicates with breaking the break of structure, and then coming back, creating thus the quasi that I talk about all the time. But basically, both of them are order blocks, just different kind of order blocks. And when I have that on the H4, let's say I have something like so on the H4, maybe a fresh order block. So something like this, maybe, let me put it like so. So that's the bearish candle, and this would be the bullish candle, right? So it creates automatically a fresh order block here. So you'd have, this is the bearish candle, and the bullish candle empowers it, right? So maybe I should mark it differently so you guys understand what I mean. So imagine this is the bearish candle. So let me paint it. So let me mark it so you guys have an idea. How are we doing on the likes today? We had 153, I think. I'm gonna check it in a short while. All right, so let's see the background. I'm gonna make it, the bearish one. So I'm gonna make it red, right? And the bullish one, of course, green. All right. So you can see how the on the lower time frame, you would see, the quasi pattern, but on the higher time frame, what you would see are candlestick combinations, meaning engulfing outside bars and so on. They're both, expressing the same thing, just with different level of zoom, right? So um, that's one reason. For example, if that were to happen, and I have a daily reason to go long, and I then get an H4 reason to go long as well, voila, I have alignment, and I can then drag the level. Let me make this not so, right, something like this. That would be the order block that I will then use the same idea as the daily, right? So that's the fractal nature of the market being applied here, where you use the daily order block, right? Remember the daily order block? We were waiting for price to come back. As they create the order, will come back to bounce off this, react a bus of this demand zone. And on the H4, I would do the same thing, right? That's the daily order block right there. I would do the same thing. So I would go and wait for the market to come back to that order block and have the same reaction, right? So a fresh order block being retested, or a quasi, either one of them. And I would keep on doing this alignment as much as I can. So I would typically go to the minutes and only take the trade when, for example, on the 5 minutes. So on the 5 minutes, so let's say I have it on the, all right, so this is the H4, right? Remember, that's the H4 order block that we created. Let me mark it. Maybe you guys can understand. Maybe it will be easier, right? So we have the daily order block here. After it has been touched, as you can see here, right there, it has been touched. The H4 creates a reason for me to go long. Let's say a fresh order block on the H4 as well. Then I go to the 5 minute, and I wait for the market to go into that area and perhaps create a quasi, right? That could be a reason. I wait for my order block to be retested, and that would be the 5 minute. And as you can see, what I'm using is higher time frame structures again on lower time frames, either quasis or fresh order blocks, to indicate um, that the market on different levels, on multiple levels, is telling us it really wants to reverse. This is no guarantee it will work, but this is very, very powerful. It's top-down analysis, and this can give you the, let's say you get in something, as you can see, it reverses. You then put your stop below the head, and you target not the quasi, the very recent quasi, maybe the top of that H4, but perhaps you can expand the trade to something on the highest time frame that was the reason you had, which is in this case the daily. Should be looking back. In this case, there is a possible daily order block to be created in the future, hasn't been created yet, and you could target that as a target. Let's see if I can manage to. There you go. I would then target. Well, that's not the one. This is the one, right? Target that, and you can see how using different time frames and getting in tight entries, using the fractal nature of the market, the same idea, same concepts on different and lower time frames, you can get in with a tighter entry and still get a decent win rate. Obviously, if your entries are on the minutes, and you're going to be holding this for a hourly target, that will diminish your win rate. Don't expect 60-70%, because that's not going to happen, but you can still be very powerful with this idea. You have to manage your expectation, but if you do your testing correctly, you will see that there is edge in there. I know for a fact, a lot of edge. Okay. All right. So let's check the likes. How are we doing on the likes front? Um, we have here 165. Okay. That's not bad, but I think we can do better. We have 20 minutes or so to reach the coveted 200 likes. Can you guys, I challenge you guys to reach this level by the end of the stream. Let's see if we can reach this. All right. All right, let's take a look at the chat. I hope. Thank you for the good responses. No problem, my friend. That's what we are here for. We're here to, help you. That's what the Fifer wants, right? The Fifers is has the intention, has the dream, the mission to reach as many traders possible and show, give everyone, the community at large, tools, exposure to traders who are doing one thing or maybe multiple things well, and so they can, learn. Everyone can learn by watching and by asking questions, and we edify each other by way of example. So that's the whole idea. Even with the Discord community, the whole idea is to support our traders in their journey to become funded. And if they're already funded, in their journey to keep the funding and keep on growing. Awesome. Happy New Year to you as well, EPP. Good wishes for you, best wishes for you for this new year coming up. Um, thank you, Res Publicas. I will see how I can manage to apply your advices. All right, I'll see if I can use an equalizer somewhere in the platform. T Bayliss, in order block and FVG, or fair value gap, and confluence can align, making the best decision on direction, along with a retest of these areas they have in common. Yes, it's the beauty of trading is that there's no one single way of being profitable. There are many, many, many ways, really millions of possibilities in of being profitable. It sounds weird, but there's so many ways where to do it and still be profitable. And any combinations of two things that work is likely to work as well. So you can keep it simple by just using one concept like the order block, or only the fair value gap, or combine them together with other stuff, and you know potentially make it even more powerful. However, I need to say though that you know adding more stuff is good, and you need that to stack the probabilities in your favor. However, there is a optimum number, and that number might different, with different people, with different kind of characters or personality traits. But there's a moment where adding too many things can make it difficult to execute and prone to make you mistrade or make judgment errors. So you have to balance it out with simplicity, while adding as much as possible to to increase your probability. So there's a little bit of a balance there. And even within a person, with time, you may develop, or you may grow as to you're able to handle more complex trade plans. And as you begin, maybe it's not best to be combining too many things. Just keep it very, very, very simple. And with time, you may be able to add some filters without it affecting your execution. But it's a very, very, very powerful point there you're making about the order blocks and fair value gaps. All right, we have 167. Zara, of course, is telling us on the likes. We are getting near. Can you guys hit 200? Let's see if we can hit 200. Okay. Hi, Scott Watterson. How are you doing, my friend? And Kim as well. Roybos Kim. That is, thank you for coming in on our YouTube session. Um, uh, I will tell them. I will tell them gold hit the 4,368. Perfect. All right. Let's take a look at let's take a look at the market, because I think we haven't looked at dollar CAD yet. And since EU is not offering me any possibility of entry, I did take a couple of trades, a couple of scalps. I didn't trade the 5 minute entry that I talked about with you guys, but I did take I think like four, yes, four scalps. Um, the my win rate on the scalps is quite high, differently from my main strategy. All of them hit TP, but it's negative risk reward, so it's not surprising. Let's take a look at gold. Let's take a look at gold, and perhaps dollar CAD. We have been talking about. I've been mentioning it a couple of times, and maybe we can take a look at that as well. So, on monthly, there isn't really anything to trade or anything to look. There's no signal, just one very bullish chart. On the weekly time frame, there is one area here below us that is a fresh, and if and when price gets there within a certain number of candles, remember the freshness rule that I mentioned, then we could be looking for a long, but it's not there yet, so there's nothing to do. On the daily time frame for gold, that's an awful fall there, a sell-off. That was on the backdrop of some progress with Ukraine, I believe, Ukraine Russia conflict. So that is a price broke this order block. That fresh one created a new one, so you have to update the charts on every close. That is the daily. So we have a fresh order block of short, right, to trade short from, and price came back, not surprisingly, to the next order block on the same time frame. There is one below us as well, but that one, was it the fresh? Let's take a look. Actually, it wasn't used yet. Was it still fresh? 2, 4, 6, and 7. Yes, it was fresh. So actually, this is the area that I'm actually more interested in. Right. So to me, that was the area that the market, not necessarily this. Right. So this is the area that I'm looking for. The market is reacting, but that was already yesterday. So you could look for a reason to go long here on the H4, and there isn't. There is an outside bar here, but that was probably during rollover, which you need to be a little bit careful, because automatically you'll have, before rollover, a smaller candle because of rollover. Um, and the next candle where the market starts back will have typically a bigger candle, and that can give you false positive on outside bars. Normally, very, very powerful candlestick combination, but around rollover, they can give you false positive, meaning false alarm, meaning a false signal. It could give you indication. Normally, if this would happen during London or New York, that would be the order block to be traded long. But because this was during rollover, I that's not a valid one for me. So there is actually an area here. That's a fresh order block on H4, and it is an outside bar. It's not engulfing. So I would be interesting. It's the there, right there. So I would be interesting to see if we have alignment on gold. Remember, the area on the daily that I'm interested is way lower. So in order for it to reach that area, it would have to go through the H4. So just take that into account when you're thinking about going long. Also, looking at the direction of the impulsiveness, this H4 a lot to go with for a setup yet. The H1, H2. I don't have anything on the H. Was there anything on the H2? There wasn't, and there wasn't anything on the H1 as well. So I have no alignment. I only have an H4, which is formidable as a time frame for an intraday trade. But on its, without alignment, it's not my trade plan excludes these opportunities, right? So I don't trade them. Basically, the probabilities of them, if it's only visible on H4, is not great. You can still react from it, but it's not something that I want to be using. And even so, I would have to go to the 5 minute and the 1 minute and look for quasis. And so far, they're not present, right? That's the neckline. That's the break of structure on the 5 minute. And let's go to the 1 minute to give you some examples. The neckline is all the way up here as well. So basically, there's no break of structure. There's no reversal trying or attempting to be made. Basically, that H4 looks very weak in my opinion. And, so far it looks like it's not very likely to respect this H4. It can. Everything is possible, but the likelihood isn't that great, right? The probabilities aren't that great. So I would wait. I would rather wait for price to get back into this area, and then go to the hourlies and see if there's alignment for the level. And if not, then I would just, if it keeps on failing, I would just look for the short basically. Actually, if this in about 10 minutes, this would create a bearish engulfing, and that would make a lot more sense to go for, right? So an H4, and as price creates, this is the creation, this is the move, that's the bullish candle, and that would presumably be the bearish candle. Let's say it closes something like this, and I would be looking for a reversal in the direction of the impulse that we had before, right? That makes a lot more sense into that demand zone that the market reacted from. So if that were to be the case in about 10 minutes, and actually that's when we close the stream as well, I would be looking for an entry based of this refinement on the H2 of the same H4 supply area. Maybe on the H1 there isn't anything, so it'll only be the H2, and I will wait for price to come back to this area. I will leave it in blue. Normally I have it in yellow, just to have some contrast, because this is, I believe, that's the breakout level, or what was it? Let me check. That was the breakout level from before. Yes, okay. So I'll keep that. So basically, we can go to the 5 minutes and look for the quasi now on the lower time frame, right? So that means neckline painted, neckline marked would be here on the 5 minute. Let's mark it as such. 5 minute there, and then look for the entry order blocks. So this could be something to be traded, right? So 5 minute entry would be here, and this one would be the second one. There's only two, and same thing as I indicated. You wait for the market to actually reach this level, and then you use price actions reading skills to understand whether or not the market is reacting upon these levels, and only enter when you have some kind of confirmation. Okay, it's never going to be 100%. It's never going to be a guaranteed sign, that the market has reversed, but it'll become with time. If you don't have this skill, with time you'll understand. Okay, whenever it does this break structure, comes back, and it fails to make a higher high, for example, that's a sign that sellers are actually getting grip on the market, on the price action, and the price is going. Let's say it does something like this, and then it breaks that level, breaks the structure, and it can make a higher high, right? It just goes like so, but eventually breaks down again, right? That's a sign, leaving that right shoulder and that's a sign, market is getting weaker, and you can, start whenever, the more you wait, the more certainty we'll get, but the worse the entry will be. So you'll have to balance that out depending on your price action reading skill to be able to read the market correctly, when it's going to react. It's not going to always be going to react. So you have to not be too sensitive, because otherwise you're going to be getting in all the time in almost every reaction. But that's not the trick. The trick is to, be patient, wait for the market to confirm, very convincingly, that side, the sellers in this case, are taking over, and only get in when, everything lines up, and the market is actually giving you the signals, or, confirmation. All right, let's check our chat. I'm not using high volume notes, by the way, Scott Watterson. I'm not. Only using order blocks and quasis, all around. I mean, all the time. All right, so don't forget to hit the like button, everyone, and subscribe to the channel. We have 171 likes right now. We can still make it. We have about 7 minutes. What's that? That's about 3 likes a minute or so, right? 29. It's about not three. Yeah, about what is that? Like 4 likes a minute. A little bit more than four. 4.14 likes a minute. You guys can do that. Only 4.14 average likes per following 7 minutes, and we'll reach 200 likes today. All right. What scalp did I take? All right, I scalp. The I'll have to check it for sure. I don't remember my scalps that clearly, but it was around this time. Let me double check the time that it was. It was before I went to gym, and I went to the gym at 5, my local time. So that was around here. It was around, I believe it was probably around 4, maybe around 5 o'clock, I think. Actually, no, I think I did one scalp around that time, and the other ones were earlier, um, around here. So that was, I had a very short night rest. Yesterday was before going to bed. I took 2 scalps here. Let me see where that was. I think it was here. My short were probably took something around there, taking shorts. Yeah, probably around there, maybe a little closer even. I'm not sure. Um, and a couple of shorts in there, and I took a short around 5. I'm not sure when it was. I don't see the reason here anymore. Yeah, I don't know. It's not like on the quasi that I can pinpoint exactly where I enter. I can check my history though, but um, probably in here around 5. I think I took a long as well. There were 4 scalps that I took around in here. Let me check if it was. Actually, it wasn't gold. It was EU. So what I just indicated is the time is right, but not the asset. It was EU. Maybe I can go check EU. Let me check it. So one was at 5, and I think one or two, I'm not sure, and the other, at least 2, was before going to bed, and that was all right. So it was in here at 5. So that must be perhaps around here. That's a short around this area. Probably in, nope, around 5. So that would be, yeah, around here. Should be around this price action, and around here, if I'm not mistaken. Those levels, structures, bearish structures being retested, and catching these similar moves. I'm not sure if where exactly the entry is by memory or by heart, but that's basically the scalps using the higher time frames, which was indicating sellers coming in and still having control. Actually, yes, there was an outside bar here that created, yeah. So basically, when I scalp, I use the same concepts, but just slightly different. Just going for the very next level on a very low time frame, and I'm using H1 and the 15-minute, 5-minute, and 30-minute structures to direct and have the momentum and wait for it to come back, and then get your entry in that same direction. Same idea, the same way, the same tools that I use on the higher time frames, and on the main strategy, on the higher targets. I mean, but just just for a little reaction all the time. It can be as well. I use on the H4 order block or a daily order block. Whenever it gets hit, for example, you have a daily order block. That's a good example here. Let's say you have a structure, right? A structure that is well defined, right, within my main strategy, like a daily order block, right? Part of a quasi doesn't even expire because it's not a fresh order block. Whenever price comes back, so that would be the 16th of December. Let me go back to that time, right? So what I would do is it doesn't show here. 16. This is the level. Let me mark it so we can use it in our on the lower time frames. All right. I zoomed in too much, I suppose. All right. So we have this area. That line, we have the fresh order, not the fresh, but the entry order block on the daily quasi. And whenever you go to the lower time frames, you can see that the first retest of these levels is golden, right? We come back from a lower time frames, and the market reacts to them very, very nicely, right? You have these areas, right? So you have multiple within one day. This was on the, that's not on the 16th. The 16th was this, yeah. So this reaction, this first time we come back to that area. So you're using daily structure, but it can be even weekly and H4 order blocks, and you name it, whatever higher time frame structure that comes into mind. You can see the market comes back to these areas and reacts to them. That's I didn't hold it very long, but you don't have to, right? The reaction of these higher time frames, and you can look at on the 1 minute and see what kind of let's see if it's visible, how much I can go back. I think I can reach that. Let's take a look here. Actually, let me go back to the 16th. Yep, that's much better. Okay. So there you go. You can see it on the 1 minute, right? So you have a fresh an area here on the daily time frame, a structure that is being retested. And you can clearly see the market didn't reach it first. This line is the lower border of that daily order block. And this is the whole concept of me scalping. So the market comes in strong, doesn't have a problem the first time, the first candle that comes into that area you can see how the market breaks through it, right? Doesn't start with just tapping it with a wick, breaks through it, closes above on the 1 minute, and has some follow through, right? Actually has an outside bar, right? It comes back and retest. It's a break and retest right there, right? Breaks it on the 1 minute, retest, and shoots up. At that moment, everything is looking great for the buyers for that breakout. And either you can go, you can scalp this in that the same direction, right? The direction, break and retest, put your stop wherever you want, and scalp for a couple of pips, um, or you can wait for the same breakout to actually fail, right? So the fail would be, what was the last structure that cemented that long setup, right? That's the break and retest. So whenever that last structure gets broken, that's a sign that something has changed. Maybe it's just a step back and will continue to push forward, or just maybe it's the beginning of the breakdown or the reversal, right? So in this case, on the 1 minute, you have the outside bar that was created, and what happens next? Even after it had the outside bar that created the order block, it didn't take long to break it. See how it closes below? That's a clear sign of invalidation of that cemented, supposedly cemented structure that assured all the buyers at that time frame, that this is a good buy. They're now trapped whenever it closes back down. And now it happens a lot of the time. It goes through this level and eventually go up. So that's just one sign. And it gives you one engulfing here, right? So it gives them hope again. And then finally it whams them or slams them, like a body slam. And that moment, if I'm a buyer at that moment, I know I'm in trouble, right? I have to close this trade because I'm officially trapped. And that's the worst position you want to be in. As soon as you're trapped, you want to get out. And as you can see, everyone got the message, and the market tanked, right? And that's what I just explained is a higher time frame structure, an order block on the daily time frame. This is being interacted on a lower time frame, and you can read price action and scalp them, and that's my scalping basically. So reading price action and just catching a couple of pips as it is, confirming or violating, invalidating higher time frame structures. I mean, not the structure. It didn't violate the daily structure, but the big breakthrough or the reaction. Because whenever price reaches these daily structures, it can, it always have two options. Either it reverses from them, or it disregards them altogether and just continues like nothing happened, right? So the breakthrough or breakout would be like nothing happened. Even if it's a supply zone, it's not stopping me. Or the price action will behave as if, not as if, will behave like it is, which is a supply zone, and it's actually reacting from it. And reading price action, understanding where you are in the context of the bigger time frames, you can catch these little moves, even if later on the market goes higher, right? Because you're already out, it's just a scalp. You just go for maybe on the 5 minute, you look for a structure to, let's see if I can go back to, on there it is. Let me check where it was. This is the 16th. So I believe that was something later. There was this one. Yes. There you go. So what you could do is, let me clean this up. Right. So what you could do is, whenever you can, target the next order block on some relevant time frame, maybe that one, maybe that one, maybe that one, depending on how big the structure is and how many signals it's giving you that the sellers, in this case the sellers, are taking over. You could also look for the next structure on a bigger time frame, which was the, well, you get the picture, right? I'm giving you more options, but on the 15 minute, you had these, that was a very obvious place that where price would go to, at least. um, yeah. All right, so that's it. Let me go check the chat before we conclude today's session. I hope you guys had this helped you watching us here at the Fivers. Please, let's see if we got the 200 likes. Let's see. This is the moment. Let's see if we reached it. Did we? Did we reach the 200? 183. We were close. We were close. We'll have to do it better next time. 183. Not bad. Thank you for all those likes. I like that a lot. Aiming for that 200. Like to be a little bit ambitious. Maybe we'll reach it next time. Let me double check here. We'll have, let me put this to something that makes a bit more sense. So we have a little reaction on this order block. See the order block right here, right? See how price comes back into it. And whenever, before it was clear who was in control. As soon as we get to the demand zone, it starts behaving differently. And actually now it's even started looking like it wants to go up. Whether it actually will do that, we will have to see in the near future. All right, that's it for our session today. I want to thank everyone for contributing. Um, let's check the chat in the meantime before we stop our before we stop our session here. Manish is one of our great traders in our Discord community who is inviting, was requesting me to invite everyone to our Discord session. Yes, our Discord session is in about 40 minutes, a little less than 40 minutes, more so, and it's a great area great place to meet similar-minded people, traders who are in the same boat as you are, as I am, we are trying every day to improve our trading skills, climb that ladder, going for bigger payouts, more consistency, and helping others in the process. Nothing more beautiful when we have, when you can see that happening in the community, and we see that on Discord as well as on YouTube, often, very often, where we see others coming back to our sessions, telling us, that they have been improving by applying perhaps some tips, some tricks, some advices to their own process. So that's amazing to see, the fruits of our labor, basically. All right, that's it for this session. Let me double check here where the correct button is, which one I need. All right, so yeah, so thank you all for coming in and being part of our session today. I really appreciate it. I wish you all. I wish to see you tomorrow. Still, last day of the year. If that's not possible, then I wish you from this day already a very successful and consistent 2026. For everyone else, see you guys tomorrow, or even maybe later on in Discord. Take care and goodbye. Ciao.